So what you can do is just in the immediate candle, so not even ignoring the previous range, just this buy side of the curve, sell side of the curve idea. What you want to notice is when up close candles lows start to get closed below and traded through. So like bullish candles, their lows should not get traded below and close below if it's going to be bullish. And it's the same thing for bearish. So even on this whole down move here, notice how the down close candles highs are not getting traded above. So like you have a down close candle here, this bearish one, this red one, and then its high doesn't get traded above. Next candle, its high doesn't get traded above. This one, it wicks it, sure, but it closes all the
Correct.
way back down here. This one doesn't trade above this one, and even this one here, again, yes, wicks it 100%, doesn't close above it. This one doesn't close above it, keeps going, doesn't close above it, doesn't close above it, doesn't close above it. You only actually get that if you really want to just be technical here on this candle. And then you can see the bullish shift that you get afterwards. And it's not
Now
even a
this,
shift. I don't want to say the word shift actually. You just get bullish delivery because a shift would be like a bullish break and then go for the highs. But even a retracement in a bearish range like this, it's still buy side delivery.
correct.
Like
Now
this
this is
this leg
also
here.
applies to higher time frames, right? It's better on the higher time frames.
Yeah, so it's not that it's better. It's just obviously there's going to be less of them, but it's going to also be the bigger picture because that's what it's moving
Correct.
inside of. If you're trading a 4 hour, market maker model, you're still in the market maker model whether you're in a 1 minute or a five. You're just at
Correct.
the current price. So this whole thing here, even though this model was not even an hour, this is the same thing we can go look at on 15. You'll see it right away. So what you can do is notice how at this point here, up close candle, low gets closed below on this one here. So if you're
Yes.
bearish, what should be true? You should see bearish turtle soups. So that means failure swings, something like this, what have you, or just straight up even like a swing high and then a sweep of it. You want to see up close candles, their bodies hold, which it does here. You can see it hits it multiple times, does not even close above it, or even 50% for that matter. And then also, again, you would not want to see down close candles highs get closed above. Which, if you really want to be technical, you could say this candle here got closed here, like this one here got closed here. But when you apply all three of them, or even at least two of them, or if you can like recognize that this is an order block here and use this as your invalidation, and then you disregard for example, like the down close highs for a little bit, um, you can still see that the up close candles though never closed above the previous one. You have this one here kind of holding, held by these two, trades back up into it. Again, a swing high sweeps that, and you get some type of move like this from a bearish range. It's very, very likely just to chase in retail to get them to think they can buy it. Because again, people already bought this double bottom here as well. So now they're thinking, oh, big trend line, triple bottom, buy it. And then they all get crushed out. But if you're going to be looking for what's actually happening, you really just want to go for those three things for the candles. You want to see some type of closure below slash CSD. You want to see your turtle soup in some way, shape, or form. And then after that shift supposedly happens, or even if it does happen for that matter, you want to see those other things hold true. You want to see up close candles start to hold price.
Yeah, correct. So up close, so if it's bullish, up close candles close above and not close under.
If it's bullish, yeah.
Yeah,
I'll,
correct.
I'll show you one. It'll be really obvious. Because you can use it when you're in really, really far distributions or like price runs. You can just use that. So like Friday was a phenomenal example for down close, anyways.
But yeah, but I was in this trade all the way. I mean, but again, what I was trying to say is like, there's this girl, Tanya trade, Tanya.
Yeah.
I don't know if you know Tanya trades. So I follow her, because she's usually looking at the same thing that I was looking at. I was looking at it, but I was not sure if it was. See, for me, I was like I was unsure,
Mhm.
But I saw that she was going for it too, and I was like, oh, okay, so then I was right. Um,
You were right in terms of what? Like the target? You guys both have a target?
no, well, yeah, we
Or
went for the well, her target was a little bit different than mine, but it was the displacement that I saw. And then when I turned on the YouTube, I saw that she was looking at exactly the same thing too. You know,
yeah.
I was just kind of like seeing if she was looking at the same thing that I was. But it was on MES when I did it.
What time was it?
Yep, see it right there.
Talking
It
about
was on the
this down
15
here?
minute.
On the
It was no,
15.
no, it was on the 15 minute at the top.
What time
Okay.
was it at?
Let me see.
It was Friday though, right?
Yeah, correct. That was that last trade that I posted. So that was at 9:50 a.m. I'm sorry, no, no. The it had Let me go to 15 minute.
You posted a 15
At
minute
9 a.m.
imbalance. Yeah. So the 9 a.m. candle.
Correct.
You
Yep,
took this
9 a.m.
short after?
No, I waited after I saw that imbalance. I went into my lower time frames and I was looking for smaller imbalances to find my entry, which there was two.
Okay.
One did not trade into,
Mm-hmm.
but the second one did.
You're talking about this one right here? Or like
Um,
this night this was the 9 a.m. one also that got created. So I mean it traded up into
correct.
this
So
9
yeah,
a.m. one.
so that 9 a.m. when I traded, right? So the way that I'm thinking of it, okay, great. So let me make sure that it rebalances, and then after it rebalances, it starts creating imbalances for entries. Correct. So that was an imbalance on the 15 minute.
Yeah.
It balanced, and then I went into my lower time frames into a 5 minute to look for an entry. And then on the 5 minute is where I find the first one, which you have it marked right there.
Yeah. So if you're gonna
Not
take
not that one that you marked.
we're talking about the 950.
The second one on the right.
Yeah, the 950. So if you're gonna take let me ask you this. Which I would recommend doing is putting like your POIs, like for example, you're noticing this 15-minute balance. You should mark it on a 15 and then go see it on a 3/5.
Yeah.
So you can see even on this, we traded well past
Yes.
it.
But I saw that the candles were closing um under the last one. Um
This one here?
no, the last three candles before it did the second. Yeah. Before it did the second. So you know how it closed the invalidation.
Come on
I'm
here.
sorry, it closed it rebalanced right there. Okay, so those three candles, I saw that they were closing
Hang on.
under the previous imbalance.
Oh, okay.
So I don't know if that was making a difference, but on my screen right now, so we have the this is what I saw. What I saw. There was the
Yeah.
imbalance. Okay, started coming down. Now once I saw this, I was like, okay, great. Now it's coming down. Now I'm looking for smaller an entry on the 5 minute. There was one right here.
Mhm.
There was one right there,
Right.
and then there was another one.
Yeah, the one other one right
Correct. There was another one right there with the intention to go to the previous low. So in other words, it's gonna. I was thinking it's gonna go for the low of day,
there. Yeah.
previous previous day's low.
Mhm.
Okay, and it's gonna go right through it.
Yes. That is
Right.
good to think that.
Yeah. So this is where I didn't take my entry here. I think I missed that one, or I took this one. I'm not exactly sure what the picture is. And that was my goal.
Mhm.
Stop was right here, right at the top. Okay. Sold for. It was a good. I think it was a 4-to-1 ratio.
Yeah, no,
But I saw this. Now, on the trade itself, the reason why I took the trade was because Tanya was taking the same trade. But if it wasn't because of her, I would have never taken the trade. Because if I'm looking on the 15-minute, it never swept a liquidity point. It is just a pullback up to the previous day's high. And for me, it was just okay, yeah, it's a judo swing. But at what point in time do I say, okay, this is it? This is where it actually turned around.
yeah. So I mean,
So that's the issue that I'm having. So basically, every time I see something, every time I see a displacement, I was like, okay, it's a trade. But I see this every day.
yeah, because you're just gonna see a delivery shift.
Yeah,
So,
correct.
so I mean, for something like this, there's like 7 things I want to say. Because you haven't watched any other. Have you watched other ICT videos?
I've been reviewing. This is about the fifth time that I'm reviewing all their 44 videos for the 2022 mentorship.
Have you? Oh, have you ever seen his core content?
Which
It's a 12-month
which one?
series he has. It's called his core content. You should watch that if you're gonna.
Okay,
You don't need to rewatch 2022 like more than
the
twice,
core
if
content.
that.
Okay,
Unless now that's what you want your model to be, that's fine. But there are absolutely more advanced models that you can use that have better everything. So the
and
first
that's what it's
factor,
called. It's called core content.
yeah, just search core content month one.
Okay,
So because the biggest thing technically is time, but I'm not gonna go into that factor at all because you don't know time
yeah.
yet.
So I always wait for my market open, and if it's in the PM, I usually wait till about
You should wait till like
one
1:15,
before
1:30. On paper, you should wait till 1:30. If you're advanced ish, you can wait till 1:15.
ICT stage. Wait till about 2:30.
Yeah,
But
2:30. He
I
says
see the trades before then. I'll see trades before then.
he definitely says 1:30. I don't know where you heard 2:30
Oh, he says 1:30.
for the PM session.
Nonetheless, I'm thinking of it as like you should be taking your trades. If there's no trade in between like 2:30, 1:30 and 2:30, like because I know he says that in the morning.
Yeah, no, it's
In
possible
between
you
the
don't
market
get one.
open till about 11 o'clock, then don't even bother.
Yeah, no, I agree with that. But I'm saying if you are a PM session like person, or like if you're looking to trade the PM session, you should wait till like 1:30. Anything after that's fair game, sure. But it's also possible you don't get something till 3 o'clock, for example.
Correct.
So that is a thing as well.
But for me, the AMs is like so much better.
Yes, no, I like the AM a lot better as well.
Yeah.
It's better every. So again, so you don't know time, so there's a reason that like this reversal had to occur. But
Mhm.
as for so if you already understand that this whole thing is a Judas swing, the entire premise of price then would to be eventually collapse through everybody because to get all the sheep bullish because they're just following the market up, 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 up until 8 o'clock, whatever, and then if it's a Judas bullish, then it should be a crash bearish to the previous day's low, like you said.
Mm-hmm.
So if that's you already had the target and everything paired, so
Yeah.
if you notice a delivery shift, realistically that should be all it needs. Now you go back to again like that the candle thing we were talking about. If you're gonna be bearish, what are like the three things that should be true, right? If we're going back to the 15-minute, up close candles lows and down close candles highs don't want to be hit. So if you remember, we talked about like you don't want to see an FVG on the retracement of your leg. So like if you're bullish, you don't want to see a bearish FVG on your retracement, or what you think is a retracement.
Okay.
So
I
that's
think I'm
one
following.
that's one of your one giveaways you could use. Or like if I'll say like FVG on retracement, like that's what it means. Because you don't want to see that if you're actually going to be bullish, what should happen? Down closed candles should not get broken, nor should bullish turtle soups for that matter. Bullish turtle soups are going to occur after the down close, technically, just because of the order of price. But those two things should not be breaking.
Oh, okay. I see what you mean. Okay.
So we have this down close candle here, and then these pair of up close. So that can act as our order block because it's just consecutive up close candles, and it's separated
Yes.
by this down close candle here. That's what separates it. So it's these three up here, and its lows gets completely closed below. So I want you to notice how on our up move while we were bullish, what happens? Up close candles lows don't get traded below and close below. They might get traded below sometimes, so I guess be open to that, but they really shouldn't be closing below underneath like this here.
Yeah.
So notice how all the lows here, and even when you get an FEG, no closure below the FEG keeps continuing, still going. You also have down close support to pair with it. This is the second thing you can use. And then you get your FEG after distribution. So just like your morning session short, this is the same thing for the buy side now.
Correct. But you see that the candle, it actually, see it opened on the low and then,
This one here.
yeah, correct.
What about it?
So, now the candle cannot close if it's bullish, it cannot close, but it can open.
It should not close below the previous up close candle.
Yeah. Okay.
The previous up close candle. So this candle, we're not concerned about this down close one at all. It's not our invalidation at all. It's going to be this one. The up close lows should be closing above other up closes lows. So same thing on this down move here. Down close candles highs should not be closing above the previous down close candles highs. So when we're on the way down, we don't care about these up close here. We're just looking at the down close and seeing are their highs getting closed above. Or when we're bullish in the up close, are those getting closed below? And again, you can see how similar this one is, especially if I invert the chart. You can see how this is pretty much the same thing you were doing. After you get all your shift, your distribution, you get those first and secondary FEG to make for the final move. Just like how you were doing on Friday.
Maybe that's what I need to do. Inverse the chart when I'm trading.
I have thought about that because I do see, admittedly, I myself see shorts differently than longs, but I'm just saying
Yeah.
as an example because I'm sure if inverted the chart, you see how similar it was to the 5 minute short you were showing me earlier.
Yeah. Correct. Like it literally makes so much sense.
It looks
Better
identical,
sense.
but it's on a 15 minute.
Yeah.
So, but again, so like even though what I originally was showing you on wherever that 1 minute chart was, it's the same thing it's the same thing everywhere. You just gotta see it enough times.
Now, when I'm placing my trade and always stick to the 15 minutes, look for the pattern. Okay. Now, when I look at my entry for the 5, should I apply this same thing when I'm planning my exit? Like, okay, I think this is not the trade, it's not going to work out. When I start seeing, let's say if I'm the market is bearish, I'm in the market bearish, um I'm getting down close candles. Should I be following I still be following that on the 15-minute, which where I saw the move, and or it is should I stick to only the on the 5 minute, which is where I place my entry?
On paper, it shouldn't matter, but to be quote unquote safest, you should do the 15. Only because you can get really nitpicky on candle closures on like as you go smaller time frames, because you'll just see more candles close, so you see more fake shifts, things like that.
Okay.
Because even something like this, like the reason people get baited on something like this is they see, oh, a couple FVGs, right? A couple bearish ones, so they try to sell it, and then it completely starts blowing them out of the water. But so like on a 5 minute,
And then
this looks like, yeah.
that's why it did another displacement again after it got balanced.
Mm,
So it was just taking all those
kinda,
stops out.
kinda. The reason it left this so quickly is because this was balanced. So like you had your buy side, you had your sell side, you had your buy side again. You have the last sell side to fix the buy side, then it's all good. That's why it leaves it so quickly. But I'm just saying the idea of like, oh, people could think these are like bearish FVGs to take, or they think that this is a bullish shift, whatever. Or especially they see this, they just FOMO in at the top. But so this looks bullish on a 5 minute, right? But on a 15, it looks like not that at all. So you can do either one, but you need to recognize that on the smaller time frame, you're going to see quote unquote fake shifts. Ones that like as a pattern will look real, but because the time frames, but that's only because the time frame's so small. That's the only reason. But you got to remember your higher time frame picture and where you're actually at.
Yeah. Because my rules are just that. But right now what I've been doing is I've been sticking to just 15 minutes. I watch whether, where my buy is for the day. Then I go into my 15 minute. I just sit there and I just wait for the pattern. Um, the judo swing, which is going to go in the opposite direction where I'm expecting it to go, and then I just wait for displacement.
Yeah.
Um, and then I'm even more confident when the displacement happens after it goes into a liquidity
Mm-hmm.
to a liquidity pool, a
Right.
15-minute liquidity.
Yeah. Makes a lot of sense.
Okay, so I'm still just doing everything right.
For the most part, yeah. I'd say execution wise or whatever, the lot size thing is still probably causing a lot of that. But if you want just like stop loss management, placement, what have you, you can literally just trail to, if you're bearish, down close candles highs.
Yeah.
And then if you're sitting more sideways or consolidating, then mix in, I should say, some up close candles as well with it. Sometimes you'll get a push down really quickly and then it'll sit there, come back up to it, and then go. So like you're gonna get down close candles highs, they're gonna get closed above like here, here, and here. But the actual up close invalidation or like the bearish order block is still sitting right there. You
If
see what
it
I'm
breaks it, then the trade is flawed.
Yes, if it breaks above this, then yes, it actually is. But like you don't want to follow that down close candle rule like full heartedly. You want to use all three of those. Because like I said, you'll see times where you get, oh, you're gonna say down close candles highs are getting traded or closed above. It's now shifting bullish, whatever. You have to be either A, willing to switch back bearish on the same logic, or be able to ignore it and then use other methods of invalidation, like the turtle soup or just the order block. You see what I'm
All
saying or
right.
no?
Yes.
Okay.
And once it gets validated, I'm sorry, not validated. When the imbalance gets a rebalance, that automatically becomes a it should not go back up there.
It shouldn't have to, no. It can trade back up into it multiple times if it really needs to, but no, it shouldn't be like ramping above it. Like sometimes you're like this, you're gonna get just like a one tapper and that's it. And that's just what it's gonna
Yeah,
be. Sometimes you are gonna get it where you get one and then it has to trade through it multiple times to fix what it broke as it was fixing the previous stuff. So
correct. But
like
I will usually, if it doesn't rebalance it the first time, it might dip in there again, but above um the last, I guess, um, above the highest candle that it did. How do I say this? See on my chart on the 5 minute.
yeah, if you have something on a chart, we can look at charts too. To do hypotheticals at all.
So like you know how it doesn't rebalance the whole entire fair value gap. I always see it that since it didn't rebalance it, that it might just go back in there again and rebalance it.
No. So some of those, like this 951 that never came back to, this was a breakaway gap. So this wasn't an actual fair value gap. It's going to look like one on the chart, but what it actually is because price was trading here already. Think of this price level 6,066, right?
Uh-huh.
So if it's trading sideways, it's offering buys and sells, kind of like how this is right here. Buys and sells at
Yeah.
this price level. So it's allowing both buyers and sellers to get in at this price. So like when it's offering buy side delivery and it's moving up, it's offering buying at those price levels, whatever it is. And then you'll see sell side offered those same price levels. That's why you see market maker models. So you have this consolidation here, just sits here offering. You get a little bit of a buy side up from like here to here, and then you get sell side back through it. But now you're getting sell side a little bit deeper. So you have essentially this already balanced price level. Like just think of a y-axis on a chart. Like just this number here, just the number, the numeric line, the y-axis, right?
Yes.
You have a consolidation here, so everything's 66, and everything at 66 is basically fine right now. You have 66 to 70 gets buy side. So 66 to 70 has buy side. So that means 66 to 70 also needs sell side, which it gets that from this down move here.
Correct.
And then it also gets this as a bonus. Not even a don't use the word bonus. It just has sell side offered until from here to here. So now for sell side, say we went from 70 to 60, right? So we did 66. We did it cleanly. We did then 66 to 70 buy side, 66 to 70 sell side. Actually, we went 70 to 60 sell side. But because we had buy side from 66, we don't need to come higher than 66. And the reason for that is because 70 to 60 had sell side. But if 66 has already had buy side, the only thing that's left is 66 to 60 needs buy side. Does that make sense or no?
Yes.
You can think
Yes.
of it as like
It actually
also
makes sense.
even like a number line. You
But
have
that
60.
you only think of it this way when it does a displacement because that basically validates. Okay,
No, it
great.
does
That's
this
why.
all the time. You don't need a
Yeah. No. No.
displacement.
Correct.
This has nothing to do with displacement. It has very little to do with displacement. They barely matter.
But then, at what point in time do you see? It's because if I'm looking at the charge before the displacement, then it doesn't make any sense.
That's fine. If you want to wait for the displacement, you can. What this really will do is when you start balancing these ranges, this is how far you can anticipate retracements to happen, essentially. So let me try to keep explaining because I might finish it off.
Okay.
So, because you're with me so far, right? We've had
Yes.
okay. So right now we need buy side from basically 66, right? Because we had consolidation, buy side, sell side. All of this range right here, right now is fine. No need to trade back up into here. It's had balanced and then buy side and sell side. That's balanced. And it's balanced again because we had buy side offered, sell side offered at the same numbers. So again, we had now sell side from 66 to 60, from here to here, here to here, however you want to label it as. So when we're anticipating a retracement, if we've already offered price efficiently at these levels, we only need to come to the last inefficiency, which is going to be at this consolidation, aka at 66, to then keep going in this case. It only needed the last of
That's why.
the
That's why. That's why
outside.
that candle comes.
That's why it stops here.
Right up.
Yes.
Yeah, well, it stops there, but that's why that candle comes right up to that low level.
Talking about this one right here? You're talking about it comes up
No,
to this low here?
no, no, no. Right under it. Once, let's say once, what do you call it? Break of market structure. Once it
Yep.
breaks the market structure and it creates a fair value gap, that last candle where it came right back up to the bottom of that, to that low right there.
How about this one here?
That candle right there. Yeah.
What about it?
How the candle goes right up to the bottom of that
Mhm. Yeah. Taps the fair
is
value gap and trades away.
correct. Now, is that why? Because it's picking up those orders.
Technically, yeah.
Okay.
But you're gonna notice because you're gonna notice those fast kind of retrade like pokes back in when the
Yeah.
market needs to go quickly somewhere, and it's not gonna give you a lot of opportunities to enter. So it'll do just like a one tap and then go, versus like I said, sometimes we'll see one where it does multiple taps and then goes. So the whole reason I'm explaining this is it's very specific as to why it only retraced to here, to basically to 66, to then keep going. Yes, it wicks above, sure, but the body's held because it only needed to fix this sell side that was here, the sell side inefficiency.
Yep. And the bodies.
The
That's what
body's
I saw.
That's why the body's held. Now,
Correct.
because this is all balanced now, so now 70 to 60 is completely fixed. Okay, right? 70 to 60 completely fixed. This from here and exiting is price just leaving, because you need to remember, unless it can't teleport. It has to go through all the orders to go to where it needs to go. Now, yes, you can open up with a gap and teleport, but you only have one chance to do that at the open. If you just throughout the day, what have you. And that was really, I only said that just because technicality, people. But the only real other place, it really just can't happen. Like, price has to go through all of the orders, all the limit orders that were sitting there in order to go to the next price. So when you see something like this FVG, it's actually a breakaway gap. Because price has already balanced everything from 70 to 60, when it leaves it, that's just price leaving that area. There's no reason for it to come back into this entire range at all. Because remember, price can't teleport, so it can't just go from here down to here. It has to actually travel that distance, quote unquote, and through those orders, which is what this is here. That's why when you get this sharp move down here, it only comes back up to this FEG here to keep going. It doesn't need anything that's back through here.
See, but I see it doesn't make any sense until I see the displacement.
So that's fine. If you want to wait for the displacement, you can do that. But
Because it won't.
if you're going to wait for the displacement, the whole idea of what I'm explaining is how far you can expect retracements to occur. So even though
Yeah.
you have this displacement, you still should only be looking for like this FEG or like this order block, what have you, since it's the OB FEG combo to frame the trade off of. And that'd be it. Because again, even on a 15, clear all this, like trash now. Back to just the normal thing, we go back to the candles. What do we want to see if we're bullish, right? Up close
Yeah.
lows
And
and
up
down
close.
close support, right? And bullish fair value gaps holding. And bullish turtle soups, right? And especially the turtle soups. The turtle soups is what you can use as your structure shift, because those should not get hit. So even you have something like this where you have a low, you can clearly see that you sweep it, or even this one here, it's technically a rebalance. Intermediates from low for the ICT people, but basically when you get a turtle soup like this into a fair value gap, there's not a lot of reason for the market to need to come back to that if you're bullish. So those spots getting broke here and well closed below not, like a wick below like this. Because yes, at some point this candle was, red and scary and looking bearish, but it closes well back above the highs. Versus at this candle here, it completely closes below it.
Okay. Yes.
If that's going to be your displacement and your shift, then you just want to look for then the same rules, but now just shifting over. So if you're bearish, what should we see? Up close candles support the order block we talked about earlier, bearish turtle soup, and also you have an FVG. So basically all three just sitting there in this area, essentially. And if you want a little Easter egg, notice how the turtle soup doesn't get touched. Actually, it does here. Like a tick.
All right, give me 30 seconds here. I'll be right back. Hold on.
Did that hit it? 84.75. Oh no, made it equal. That's funny. But yeah, same thing. You can see the actual up close that you would frame off of if you're going to do order block here with the FVG. As to, what should be true, or even just to be continue. Sit in the FVG, and then go. And then once you have that, you then have down close highs, all that to keep going. Or even have this as down close highs for invalidation. What have you. Because even on NASDAQ. We'll look up at
the little details are the ones that just.
Yeah. It's really like 4 things, I'll be honest with you. Like 4 or 5 things that once you just see it over and over and repeat, that's all this thing does.
Yeah.
Because even if we're looking at NASDAQ, because I mainly just trade NASDAQ, we can do the exact same logic. So like I woke up at 8 o'clock, or 8:30 we'll just say, and I took a short. After this candle closed, so it was like 8:30, a little bit after 8:30, I went short. The reason for it, so again, turtle soups, right? Bearish turtle soups, candles lows, up close, get the sweep, closes well below it. What should be true now? Down close candles highs should not get closed above. So now if we're just going to follow what actually happened, and we can actually go to a 1 minute if you want to. You can see there is our same shift, our FEG. Doesn't even trade up into it. We get another one here to do the same thing. And you can see how the up close candle pair with the FEG is just fully supporting price. Now, this is what I was saying is when you go on like too small of a time frame, you're going to see the rule break on like the candle closers. So you're going to say, oh, a down close candle, this high just got closed above, bullish. You're not wrong in the sense that it is bullish delivery. And again, I'm saying delivery because it's going up. That's it.
Correct.
Because even though this wasn't a shift, this was clearly a retracement, which you can see to the last up close candle here, slash this one, this previous one. So the bullish, or I should say the bearish order block never broke. Never got broken. The down close candle high at the very, very bottom did, yeah. But the actual other invalidation method you have, and the one that you wouldn't push as aggressively towards anyways, it didn't break at all. So that is an important thing to note. So like you mentioned earlier, if you want to look at it on the 15 or the 5, you can do both. But you need to recognize that these 5 minute shifts, or like these 1 minute, you need to go up back to the higher time frame and confirm, does it look like a shift on there? That's how you can confirm a shift, using a higher time frame.
Oh yeah, but for me, I'm gonna have to really
going from the 5 to the 15 is plenty. I'll be honest with you for intraday. I'm just saying the break on the 5 needs to look like a break on the 15. Otherwise, it's very likely it's just gonna, especially the 15 still looks bullish or whatever direction it was. Very, very likely the 5 minute one is fake, or the lower time frame one is gonna be fake. So back to the rule and everything. We can see up close candles. I should say down close candles highs in this case. after a turtle soup, what have you, never closed above whatsoever. You get an FEG. So we have this candle to use as a reference for the invalidation. And just like our short, or the short you had on Friday, same thing. Trades up into it, take it short, and then it keeps going. Same thing again. Because you're going to get these, they're called IOFEDs, Institutional Order Flow Entry Drill, is what they're technically called. But you're going to, like I said, you're going to see these after the market makes its shift and everything and just wants to go in that direction. Like to, go really quick in that direction. That's when you're going to see like that first FEG and that second FEG to take to continue, just like you saw on Friday.
When the candle it's in the other candle, when you, let's say like right now we're looking at a down close candles.
Mhm.
All right. Um, if the candle is in between,
In between what?
do you count it? How do I explain it?
You can try to find an example if you
No, no. Well, you have an example right there. So all down close candles, but if the candle is in between the previous one and it doesn't close under, it becomes what do you call it? It doesn't close under, but it doesn't close above. It's like right in between the candle
Do you see one like that on this screen?
where you
I'm
see
just
that fair
asking.
value gap that just no right above it.
This one.
The right there. Okay, that fair value gap. The next candle.
This?
Okay, yes.
Yeah.
So I'm looking at that down close candles. All right, should support bearish down close candles, right? If it's in between the candle,
It
but then
never
the
closed
next
above its
candle,
high.
correct, yeah, but the next candle after it, uh, if it closes above it, does it break the pattern that it's going to be going bearish?
Mm. So, because I have thought of this similar, this like idea or scenario.
Uh-huh.
It should break it, but the reason the counter rule I have to that is the idea that if there's a fair value gap present, you don't
Uh-huh.
trail the candle and you wait at the top of the FEG candle and see if that one gets closed above, like that FEG gets invalidated. Because are you talking about like this down close and this up close here,
Yeah, correct. So you
closing in
see how it's
between
like
it?
right in between. Correct. That's right in between it, and like, okay,
Yeah.
which is it a
So
validation? It's not a
no, so
validation.
for this, I would just straight up no because a down close high didn't even get closed above. Full stop. Like even though yes, this one, I know it looks close. I don't know if it's just quality, what have you, or anything, but like this didn't get closed above. I'm talking like complete closure above the down close candle. Like even this one here, it didn't happen. The high is this down close candle here, so it literally would have to close above this level. Same thing here. If this is the down close candle and this is the high, it needs to close above. Never happened. This is the same one here. Never happened. So as this price keeps walking and walking, they never actually closed above. Now, yes, you can say it happens here, which it does, 100%, because it literally happens. Down close candle, high gets closed above, bullish, right? But as a not say a counter move, but again, you gotta pair other stuff with it. It's right in the mid. It's right into a SIBI.
In the fair value gap.
It's right into a SIBI. You know what I'm saying? Yeah, like you're saying to the fair value gap. That alone should not have you attempting that. Just because the idea of FEG continue. So it's not like one rule you use to rule them all. You're pairing this with the FEGs, the turtle soups, the up close candles support to have price continue bearishly in this case. And it's the same thing here, like on the buy side. We have our turtle soup, cool. So now we have liquidity, down close high, closed above. This one also gets closed well above, and so do these. Right? So if we're now going to be bullish, what should be true? Down close candles highs should not get closed below. Down close candles, like order blocks, should support price. And then, just bullish turtle soups. So if we're going to follow that, and we're starting bullish, quote unquote, we don't know if we're actually bullish, even though we were bullish. Let's say we're just playing the rules and this is bearish, and then shifts back bullish. Down close candles lows, we're waiting to see, does that happen? So we're here, doesn't happen. We're still here, doesn't happen. As we're going, no up close candles low is getting closed below. Now, yes, don't get me wrong, it wicks below this and trades
But it
below
closes
it,
the button.
but it closes well. Yeah, it closes well past it. Okay, cool. Keeps going. Market keeps going. Now, before again, you can say, "Oh, up close candle here, close below, bearish."
Going into the, it's going in. Oh, okay.
You can do that if you want to, but again, you have to play the rule to switch right backwards. Because what happens immediately after down close candle high gets straight through, now you're back bullish anyways. So in order to prevent that trap, or just flipping that often, because you shouldn't be, because certain things are just going to be retracements, you again pair it with your other invalidations. So what should also be true is if you're actually bearish, this down close candle should not hold price at all. So you again have this at the bottom of your range for invalidation. And I don't know if you can see how this is like an FEG on the bodies.
Correct. Yes.
So
That's why I said, I almost said, I was like, oh, it's because it's going to an FEG. But I was like, wait.
yeah. Oh no, the fact that you can see that on just the bodies alone is very good. You want to be able to, because again, you don't want to fall for a trap like that where you just get caught in a retracement just to again keep margin on.
Keep going. And
Yeah.
that's the issue that I've been having. But like it just retraces. I was like, wait, we should be holding.
Yeah. So
And
that's
it
that's
does
what you
hold,
can use
but
these.
I didn't stop that. Yeah.
Yeah, and that's what you can use these rules for. Is like all three of those, or at the very very least, the turtle soups. The turtle soups are basically the last resort because they're always going to be last in just the sequence. Versus like the order blocks are going to be, you know, kind of towards like the, you could say the order blocks are like the defensive line, like the main defense. The turtle soups are the line in the sand, and the FVGs and like the up close lows are going to be like the super aggressors, you could say. So, and again, so if you're able to recognize that, like, hey, don't hyperly aggressive trail, just wait here. Just keep the stop loss here and wait. Because that's another thing that even I myself have been going through. If you move the stop up here, or you keep it here, or maybe this way. If I kept the stop loss here, or even here, none of it would have mattered. If I was going to exit this trade at, say, 8 o'clock, just because, or I just get out at 8. If I move the stop loss off, it has no impact on where the price is at 8 o'clock. Does that make sense? It has no actual impact on your...
Talking about AM, right?
Mm-hmm.
Yeah.
I didn't hear what you said.
No, we're talking about 8 a.m., right?
Yes. This here. Let's say we long this here. We long the bottom at 7. And we're going to sell it at 8. It wouldn't have mattered to the trade if I put my stop loss here and then I bumped it up to here, or if I bumped it up to here, or if I just kept it here, or if I just kept it here. All of this is arbitrary and has zero impact. Because the price is still going to go wherever it has to go. And me moving my stop, it doesn't change the profitability of a trade at all. Unless it gets hit.
Okay,
So do keep
now,
that in mind.
going back to the turtle soup, because the turtle soup works in both directions, correct? But
Yeah.
does it have to be a turtle soup? How do I call it? Where it forms in a bullish manner, or man, how do I? Okay, on my screen,
Yeah, if you have chart examples, I would rather look at your screen so you know what you're seeing.
let me look at my previous one on
So
my.
I can, yeah, just tell me the time of the candle and I can follow it perfectly.
On my on the day that it actually reversed, my chart is up, right?
I see yours,
Yep,
yeah.
my chart is up. So I'm trying to see. You see, okay, so just an example of a turtle soup, how it, turtle soups, right? And then it would sweep. Um, does the turtle soup always have to be in this direction, or could it be in the opposite?
It's gonna be in both at all times.
Because every time I see it, I always see the turtle soup this way, but in a bullish manner. Like it could create like a higher high, right? And then it'll come in and it'll sweep, and then it'll go. And that's the way I see the turtle soup. But I don't, for me, like this way, like
I
it
would
doesn't.
try. I would go left to right. So do this. Go to click the by where your time frames are. There's the candlestick button to the left that says indicators. Hit that. Nope. No, exit. Hit that. Yeah, that button. Hit line. It's like the fifth one down.
Okay.
So this is the same thing that we were just looking at. And I just want you to read it from left to right when you're looking at price.
Okay.
So you can see how we have the reversal at 10 o'clock, the bullish one, the huge push up, right?
This one right
The
here.
reversal, yeah. We just reverse and you can see the line, it shoots straight up, right?
Yeah, correct. Shoot straight up, and here is what I would call the turtle soup.
That is one there, yeah. It's a bearish one technically.
Here, and then it would sweep, but then it continued, which is just as usually how I would take the trade. People will see it as, okay, look, it's sweeping, it swept liquidity. It swept liquidity, so it's turtle soup, but it could be coming down.
Yeah. So there are if you're gonna trade turtle soups, there are continuation ones and then there are the reversal ones like you're seeing on this one that end up being, for one, they can be retracements or they can be reversals. Like I was saying, as an entry, they're gonna look the same. But the reason I was saying to read it left to right was because I want you to notice, if you remember we were talking about earlier, what range did you come from? Like what did
From
that range come from, that turtle soup? Or just the most previous range? It was a complete.
it kept from sell side.
Okay, was that range bullish or bearish?
Well, it
What do
was
we
bullish. Hold
right.
on. If we're talking about this range, it came
Yes.
from a bullish.
Okay. There you go. So already alone, you have that to go off of. You're coming from a bullish range and you're taking a bearish turtle soup. So that alone should at least, and again, they can be reversals, 100%. But you have that as a immediate thing to look at as like a signal, essentially.
Okay. Now it makes sense.
So let's keep reading. We get from left to right, we have that retracement, and then it pushes to the new high. Right? So you got to remember, everything is from left to right, and the market doesn't, admittedly, it knows the future, but people don't know the future. So the reason that's so important is the market only can use old, pre-existing reference points. It cannot use the data that's ahead of it. So what I mean by that is, we'll go back to mine, but I'll keep it on a line chart because that's what MES. I'm just gonna do ES, but it's the same thing. This here? Oh yeah, this is okay. So again, same thing, left to right. You want to remember that the market, when it changes states in delivery, it only can use data that's previously existed. So you want to remember that if you're here in price, This is all you have for reference points and for data. This is the only thing you can refer to. You can't refer to the future because it doesn't exist yet.
Mm-hmm.
It only has this stuff available. So that's why you want to do things from left to right. So if it's creating, say, a reference point, we'll say the hindsight of like this here. If you see something like what could be like a bullish shift, if it never reaches its reference point, this data is very, very likely to not hold, or just this price action. So going from that way, if we're going left to right again, and this is our high, and we're looking backwards, because it always has to look backwards, which you'll realize when you get to month 5, where this is all coming from. When it's looking backwards at old data, at old points in the market, old lows, old order blocks, old FEGs, whatever the case may be, our previous range was a bullish range from left to right. We now have this bearish range from here to here, inside of also this bullish range, technically. So you want to remember that every time your delivery shifts, you have to look backwards at reference points to see where it's trying to go to. So, and if you remember, we were talking about the balancing earlier with like the numbers and like 70 to 60.
Yes.
This is what it's actually doing. Is it's going to reference whatever inefficiency or like the 66 level that it needs, then it can keep going. So you can even kind of see on this, we kind of trade sideways here, and then we move really, really quickly. And then we kind of go up and down on this. So like the only real, if you notice here, this is just a straight line of sell side after a straight line of buy side. Versus this, you get a little bit of mix, and then here you get a little bit of mix. They're kind of like a paintbrush, how you just go a couple strokes back and forth.
Uh-huh.
When we're going left to right, we again have to remember if this is where we're starting our reference from here, none of this is real because none of it existed yet. Because our look back started from here because we changed delivery, so we know our look back restarted because you changed states. You can either deliver bullish, you can deliver bearish. So when you shift, you have to look back from there as what you have available. That's how you see like smart money reversals and market maker models at the high and the low. Or even
But when
like
it
this
starts
here.
shifting, that's why we look for a break of market structure.
Correct. When you're really seeing a break in market structure is those invalidations getting hit. So your bearish turtle soups, your bearish order blocks that should not get touched, these old bearish FEGs that should not get traded to, what have you. All of those getting invalidated. Because you can even notice here, we crashed to this low, and you can see how we have like a bearish turtle soup here. And then, because again, even same thing like this, bearish turtle soup, you came from a bearish range. You could turtle soup this to retrace it, but you're still in a bearish range, so you're likely to continue that. So you got to remember the previous range that you're coming from is more likely to hold than anything, than just reversal.
So if the market is trending in a direction, whether it be bullish or a bearish, and if let's say if it's bullish and it creates a turtle soup, I will take it as a bullish turtle soup.
You should look for the bullish turtle soups, yeah, in a bull market.
Correct. And it should automatically, basically, I look for my displacement, then the fair value gap, make my entry there.
Yeah, because even when you're buying a fair value gap, you're taking a turtle soup, technically.
Okay.
You're
All
just...
right. And then if it's bearish and it creates a turtle soup, doesn't matter how it forms it, then always take it in that direction. See, because turtle soup, the first turtle soup on the bullish move, turtle soup, it went higher, but then it turtle souped, right? But it went lower. So at what point in time do you consider it a change of delivery.
When you when you consider that you change states, it's really
Yeah. Okay. So like, see where you are right there. So I'm looking at it. I'm seeing it's bullish. All right, but I would see it as a bearish because it swept liquidity to the left.
saying this
Okay.
here.
See, correct. It swept liquidity. So I was like, okay, great. So it swept that, boom, and then I will look for a change of market structure there,
Yeah, what you get
and then
here.
I will take a short.
Yeah, it's like you short this here, but then
No,
it blows you out.
correct.
Yeah.
Well, no, no, no. Well, I was shorted on the right there where you are right there. The
Mhm.
moment it started coming down, that's where I will start looking for an entry to the short as long as I find a displacement because it, it just it just swept liquidity to the left. But in your
Yeah.
case, it is actually a bullish.
Yeah,
This is
it's gonna it's so this still is a bearish turtle soup. You just have to recognize that this is a for a retracement and not a reversal. Is really what it is. As a pattern and everything, it's gonna look like that. It's gonna look the same because you're gonna see
yeah,
reversals that look just like that, but they actually collapse all the way through. Or you're gonna see one that looks like a retracement that looks just as good and then reverses out. So, but again, that's gonna come from using the previous range stuff and using that as your invalidation. So you want to remember that this was our bearish invalidation for the turtle soup, right? And then we have another one here, and then we have whatever this is here. So if you're closing above bearish turtle soups, you're invalidating all of that. So you want to re-let your bullish invalidations get hit again before you consider doing that. Which again, you have up close lows, order blocks, bissies, bullish for rally gaps, and like bullish turtle soups for that matter as well. So because this ends up being a bullish turtle soup and the market continues on, this should not have been broken.
correct.
And it gets broke here. So now we have a
Yeah.
shift. Because
And this is where my in and out comes in. It's just I'm in and out. It's like, oh, the trade didn't work.
because
You
people
know,
get caught thinking this is somehow a move when this has nothing to do with it. This is just all this is technically doing is just having the market take longer to do the same move. It's just it's basically just distorting time and taking longer than what it should or what it needs. Neither that, not that it should or that it needs to. It's just what it wanted to do. It's wanted to go to this low, but it wasn't the proper time to do it. So it's just going to basically stall and wait and force people in and out, what have you, and then actually go. Because again, this move was like 2 hours basically, 45 bars to do whatever this range was of like 14.
this is why I use my fib a lot.
Yeah.
Because if I can't, it's like if I think it's not gonna reach there because it's really far away, then I'll just I'll take profits. Okay.
So again, you have, let me clear this, you have multiple rules, like I said. So now that the candles are back on for a minute, up close candle here, right? Holding, 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 breaks completely. So let me remove all this. So you see what I'm saying? Our up close candle holds. This one here holds, and then it gets broken here.
That's the breakup bunker structure right there.
Yes. This should not have been broke, and it broke. Is basically what happens. That's what you want to use as a shift. This thing should not have broke, and then it broke. That's how you want to do it.
Now, do you wait after it's broken? Do you wait for the next candle to close above, or just the moment it breaks it?
It depends. It depends how you want to trade. That's not a one's better than the
Because
other.
I'm assuming here if you're holding it to come down, what is that? You basically break even if it closes above if you make your entry.
You say if your entry is like the bearish order block itself.
Yeah, correct. So if you're thinking that it's going to be coming down, no, I'm talking about if you take it at the top, you're like, okay, market structure shift. okay, we're going bearish on this trade, and then also when it turns around. So by the time it turns around and it closes, you're right back up to like what, break even?
What are you saying buying the top? You're saying like buying up here?
No, no, no. Before that.
Here.
No,
It really just depends on what you'd want to enter, because this is a breaker. This is like the last thing you'd want to enter on before you're just going to start seeing bissies just start flying into the market. Because you have the turtle soup. You could call this an order block on a smaller time frame. And then you have the breaker. And then it actually goes.
see, because I see 830. See the candle, 830.
Yeah.
Okay, fair value gap, and see how it stair stepped up.
Mm-hmm.
It closed it.
Yeah.
Then it
then what
so I
happened?
saw that, and then boom, it just the big candle at about 930 creates a fair value gap, and this is where I would have started looking for my entry. It
For your
came
short.
down, correct.
Okay.
So, and then the trade would have been to where you have your line is.
Yeah.
All right, and then I was like, okay, at this point in time, if it turns right back up and it breaks that, then that'll be a change of market structure. But if I'm holding it, expecting it to go lower because it is a bearish move, basically by the time the candle closes, I'm like break even.
I see what you're
Almost.
saying. So you're break even on the short.
Correct.
So I mean, you want to remember the market structure shift shouldn't have gotten touched.
Yeah.
So if you remember, we were saying earlier about the stop loss placement. It wouldn't have mattered if you had it, here, 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 if the move all the way goes up to here, right? So same thing if you had your stop loss here and your take profits down here. It doesn't matter if you kept it here the entire time and never moved it, or you move it after the trails. It's still going to reach the target if it never gets hit. So if you're in a spot that should never get hit, it should never get hit.
Yeah.
So your stop loss your stop loss should be at your invalidations, or if you see like a market structure shift, your stop should be at where you consider the shift to occur. And again, you can make it, if you sold 930, you can make it this if you really wanted to. On paper, you shouldn't, because this is a turtle soup, so you can trail it down, and there's rules to trail it down. But again, it shouldn't go past that at all. So you would just exit. You would just, if you get an actual shift against you, you should just exit.
All right. Could you give me 1 minute?
Yeah, that's fine.
Minute. If it's bearish, it's going to be candle should not close.
Yeah, down close candles high shouldn't get closed above. And again,
correct.
If you're going to use smaller time frames, go back up a time frame just to confirm, especially if you're going to use the candle trail stuff, you absolutely want to confirm up a time frame, or what have you, or anything, just to make sure. So, but again, if we're going to go left to right and use our invalidations, if this is a bullish turtle soup, right? And like we have one here also. These are, say, 2 turtle soups. Boom, right? That's our high, sure. Now for bearish, and this is how, when you see delivery states change, but not like turtle soups. So the reason I was saying those are going to be the last line in the sand is because they actually are. If you look at this whole price hike, it's literally going to be the last thing to break because it's at the very, very bottom. You see what I'm saying?
Yes.
Okay. So the reason that's so important is if you're going to look for changing states, this is where, again, how I was saying up close candles and all that, you can start to use, those are your aggressors. Like your aggressive thing that you're going to see change first, even though that might be fake. Like here, it was fake. But here, it was quote unquote real, or it happened. So, but again, you have things to pair with it. These, you'll notice how there's no turtle soups. These, as we look at them more, you'll see how there literally is them.
Yeah, the
So,
turtle soup right there is sweet there, and then the other one that is sweet, the other.
yes.
Yes.
So noticing that these get swept is a good sign for shorts. Granted, you can take this if you really wanted to. Sell it, put your stop there, see what happens. Let the stop loss watch it for you. At that point, truthfully, because if the turtle soup shouldn't get hit, there's your stop loss. You can just try it, see what happens. But again, if you want confirmation and displacement, you would never take that. You got to remember that also. So, now if you want to do something slightly, if you want still some confirmation, I would just wait for, if you can spot a turtle soup and some down close candles like this, or not even up close candles highs, because I wouldn't want to go there. I would wait for up close candles low, close below like this. That's what you want to see for bearish movement. Because now you have a bearish turtle soup and an up closed candle close well below. So what that means,
That's another turtle soup right there, correct?
what, this down close candle?
No,
You're talking about over here.
Correct, yeah.
Yeah, that is one also.
Yep.
So again, you have another one. Now we got two turtle soups and down closed candle closed below this up one here. So very, very possible. And what is really happening is this entire thing is basically turning into an order block, is what's technically happening. But if you can notice these things forming inside, especially the turtle soups, and again, you can apply the down close highs if you want to as well, because even that you can see didn't happen. Because if you're going to do the down close low rule here, well then the down close highs shouldn't get closed above. If you're going to, you see what I'm saying?
Yes.
If you're going to use it one way and say, oh, this is delivery down because this up close got closed below, well then if this is actually delivery down, then activate delivery down protocol or rules, whatever, and these should not get closed above, truthfully. Now again, this is, you're doing this well before you can invalidate an order block like a bullish one or a bullish turtle soup. You got to remember that. You're doing this way before you can even confirm these. So again, it's very possible if you're going to be doing this, you're going to get a retracement, quote unquote. Because it's important to remember, as a pattern, whatever, they're going to look almost the same. Now you do have, again, we have stuff to rule it out. There's no turtle soups on this really, besides this, if you really want to call that one. But here we have a few more. And we also just made a huge move up and then another move up, so people are just going to buy that.
Now, on the formation of the turtle soup over at the top, it becomes a turtle soup when the candle breaks above the 2 and it comes down and it closes under, right? It has to do that.
Yeah, it should fail to close those.
Oh, okay.
If it closed above, I would wait. You can eventually, I would say, get to that point where you actually do sell that, but you're much better off just waiting for, because if you can get a retracement, a little bit more confirmation, and you're only losing, in this case, a point difference, it's well worth just waiting for that, in my opinion. Just because the percentage of it working will be higher. So, but again, you can still apply all the same logic. Down close highs should not get traded above. They should not be getting closed above. They don't at all. At all. Not even here. You see what I'm saying? All the down close candles highs are not getting closed above at all. Since the bearish delivery we thought started, it hasn't happened. Do you see how I'm doing this?
Yes. Oh yeah, I do see it.
So, and again, you can be aggressive and play that rule and say, oh, closed above, bullish delivery. You're not wrong when you say it, but again, you got to be careful about where you're trying to deliver to. It doesn't mean, bullish delivery does not mean full-blown reversal. All it means is you're going to deliver some buy side. That's really it. Which again, you do, because again, you want to play the rules. Up close candles low, up close 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 low. here to here. The only time you get a break is this. That's your first. Again, that's like your aggressive signal, what have you, to be using. But up close candles lows closed below. Then you can do the same thing the other way. And admittedly, FVG on retracement, which you don't want to
Yes.
see. If you're bullish, you would never want to see a SIBI against you. You would want to see, you'd want to see like the minor pullback. Not the minor pullback, but like the stair steppers, what have you. You don't want to see a SIBI on your retracement. So you now have this for bearish movement. So you can play it that way. Now, yes, it just trades to this order block because, yes, this is an order block here getting created. Technically, it's a bullish order block. It's grabbing liquidity.
Well, it's order block because it created well, the next candle was
Next
basically
candle
like
closes right above the high. So this is an order block 100%. I'm not saying that it's not. And especially the fact that it set a swing low and then grabs this makes it very, very strong. Or at the very, very least prime for a reaction like that. So, but again, you can play the delivery rule. And if you remember the 1 minute chart we originally looked at, like way back, how I was saying you can go back and forth, or like you have to be willing to go back and forth on what you're getting. Whether you're getting bullish and then you shift and then you go back bearish. It's the same thing that we're doing on let me send this to you so I can take a new picture. It's the same thing that we're doing on this here. Yeah, it's shifting bullish, but then it's going back bearish, and then it's going back bullish again. Right? Up close candles lows, up close candles lows, up close candles lows. This is all buy side delivery. FVG sits in that, so then you hold through that. And then there, your actual shift back down, because then you can then play the rule back that way as well. Up close candles highs, FVG and retracement, all that.
Shift the market, yeah.
Yeah. So you have things that you can do back and forth if you're going to play just like the candle game, like the candle trail, super strict. You have to be willing to go back and forth when it changes.
Yeah,
because you're going to get a string of down, a
wrong.
string of up, and then whatever.
Yeah, because I see it.
Yeah.
I see what you're saying. I see exactly what you're saying. But that's why I was saying, well, this is like under 3 minute, but this again, this will also apply to the higher time frame.
Bingo. Check this out. This is a 2 hour chart.
Okay.
You see this? Right? The same thing we talk about. Turtle. Up close lows. Right? Which should hold true. Order block. Okay, cool. What else? Down close highs, right?
Yes.
I don't see one getting closed above unless you do. FVG. Yes, again, the FVG rule is exactly why you avoid this type of crap.
FVG. Yes.
Yeah, this is exactly why you avoid that. And again, it's a bearish FVG. You really want to buy that? Just in general. You know what I'm saying?
Correct.
So you can keep your candle trail. If you want to actually be super aggressive with it, keep your candle trail here at the top of the FVG candle. Or again, I want you to remember, instead of moving it here at like this 2 o'clock candle, if you kept it here at 6, it wouldn't have any effect on your trade. I want you to remember that also. It would have zero effect on what actually will happen if you move it up or not. And it only doesn't matter if in neither circumstances it gets hit. But I want you to realize that like that is a thing.
Correct.
But you literally just over trail yourself out for doing nothing.
Okay. But what if the because I do see sometimes that it'll form a fair value gap and it'll wick above the fair value gap.
That's fine.
You know, when it goes right back in there and it'll wick right above it. You know, it'll close it. It'll close the FVG and it'll balance it out. But it'll wick just past it and then it'll continue its trend down.
So you're looking for closure. You're looking for closure, not trading. You're looking for closure. But again, especially with the stop loss, if you're actually going to trade like that, for me, because the way I've been thinking about it is because I wouldn't want to get stopped out like that either, especially if the rule says to keep holding. You basically would have to check on a time basis the candle and if it closes or not, and then exit manually. That'd be the only thing. Because if you think about it, if you let the candle close, if it's going to close, past or back inside the FEG, it will, because you're checking at the end of the candle, not in the middle of it. So that would really be the only thing there. It's not like a stop you can just like trail and just put there and not do anything. If you're gonna go that round, try to like not have to watch it at all, then yeah, you'd have to not aggressively trail like per candle basis. And again, if you keep it up at some invalidation that shouldn't get hit anyways, it's not gonna matter because it wouldn't have gotten hit. So again, if I had my stop loss, up here, or if I had it here, neither of these get hit, so it doesn't matter. So you can keep it at your invalidation, especially if this is an invalidation and you know that if this gets hit, this is going to get hit. And that's when stuff can get really strong, is when you can pre-balance a range and know that the high or low is going to get taken out ahead of time. It's extremely strong. But again, if we're just going to go back to down close candles highs, this is a 2-hour chart. So this was about a day and a half. This was Wednesday to Thursday, basically. So now you have your day trade framed.
Yeah, that's my bias. So in other words, right there, be like, okay, great. As long as all the candles.
Yeah, as long as it's closing above. Now again, you got to be careful with risk and everything because you're looking at a 2-hour.
Yeah.
So you got to keep that accordingly. But also you got to remember, if you're looking for your smaller time frame setup, if you're basing it off of a 2-hour, I want you to realize, like at 8 o'clock here, this candle here, you see how it just goes open, high, low, close, right? I'm going to mark out this wick area just so you can see, so we can go look at like what it actually looks like on a smaller time frame. Because like if you remember,
that's usually what I do.
Yeah, because you want to remember, like on a 15-minute. Oops, where is it? Like on a 15-minute, it may not have even offered it like that.
So okay, so I see that it's going in there on the 2 hours, right? So
Right.
I will go into my lower time frames, and this is where I look for the displacement,
Yeah.
but based on my bias. Be like, okay, it's going to go in there, but it's going to reject. Okay, and this is where I will look for a imbalance to the downside.
Right. So this is exactly why I brought it up. If you're going to be taking higher time frame stuff, you need to be either not so much willing, but being able to recognize that, like, if this is my 2-hour candle and my opening price is here, I'm already selling above the opening price, aka in the wick zone, if the candle forms that way, of course. The wick of the candle, because you're above the open, you're already hitting an FEG here.
Mm-hmm.
So that should be enough. You don't have to look for a smaller time frame on top of it, always. If it offers one, great, but you don't want that to now dictate your higher time frame move out of there. Because on the lower time frame, it could look scuffed and it never looks like it offers, but on the 2-hour, it looks super clean. So if your whole thing is just selling that candle for down close, or you're looking at this as an FEG retracement, anything above this open should already be good enough. You don't want to have to look for that same FEG setup inside of this wick. You see what I'm saying?
Yes.
You don't want to have to look for, if your criteria is already met on a 2-hour, you don't want to have to look for that exact same criteria again on a 5-minute. Half your criteria is already met because you're on a 2-hour. And you got to remember, something like a 2-hour, you're only getting 4 or 5 candles a day that you're going to trade. That's literally it. So you don't have that much leeway to go somewhere else. If it's very obviously down, it's very, very likely you're going to go down. You just have to hold through the candles.
And this is what, so in other words, yeah, I could basically like hold it for the next couple of hours and it should,
Yeah, you can just
it
check on the
should
next
trade.
candle. You check at the candle's closure and see how it looks.
Yeah. Okay.
But once you do that and then you learn how to balance some ranges, it's extremely strong because, like I said, this you can know that if you touch any of this, it's all gonna get traded through. You can know that ahead of time. And know that if you say hit this, you can buy stop to all of this. It's very cool. But I don't want to teach you that yet. And it's not even that yet. It's that whole balancing idea. Just very, very more refined. So,
See,
but
and this is where, okay. All right.
so because again, even something like this, even Wednesday, FAGN retracement, right? And also notice how you're coming from a bearish range, and you'll see, like you say, a turtle soup. That is a bullish turtle soup by every definition, and then fades it because it's actually just a bearish range that it came from. You see what I'm saying? So you're going to
Yes.
see a bullish turtle soup that looks just like that to go for your retracement, but you're going to see some that look just like that to go for a reversal. Or continuation, I should say. Even like this, a continuation. And a continuation. But these
It is
these
because,
look identical. I guarantee these look almost identical.
correct. Now, it is because of that bearish candle that makes it the turtle soup
Which
on the
one?
bottom.
What,
All the way
this?
up on the bottom. You circled that, and it's about 5 candles to the right. 1, 2, 3, 4, 5, 6. Oh no, all the
How
way on the
about up
bottom to
here?
your right. Nope, at the bottom. Does shift.
This.
See that red candle right there at about
Are you looking at your screen or my screen?
I'm looking at your screen.
Okay.
See the candle right there you just circled, the wick?
Yeah, this here?
Yes. And then about 6 candles to the right, that's like another turtle soup.
Bingo.
Okay.
That's how, admittedly, I didn't trade it and I wish I did, but I said that CPI, which was the inflation part, was going to be bullish. I didn't expect all that rampage. Actually, admittedly, I kind of did, but I didn't trade it as I should have at all. I missed the entire thing. And if you want a really fun fact,
I didn't know how to trade that. I don't think I traded it.
no, you use CPI days, you want to be astronomically careful. I'll admit, even something like this wasn't just a straight line. That it was just absurd. Because you didn't want to buy because it kept going, but you didn't want to short it because it kept going. So, but you know what's super cool about a day like that? You get the rules. What rules? The rules we talked about today. So Eddie, what should be true if we're bullish? Shifted bullish after CPI. What are like the 3-4 things that should be true about the chart if we're going to see bullish delivery?
Up close candles should they should be up close candles.
Yes, they should not be closed below.
Correct.
They should not be closing below previous up close candles. So I don't know about you, but I don't think we do that anywhere here. Still not doing it here. I'll admit we do it here. Don't get it twisted. So even if you did take this and you said, okay, this is bearish, meh, that's fine. What happens? It gets broken immediately. So now your bearish just got, even if you did take this bearish, you just got invalidated. Keeps going. We get a turtle soup here, which is cool. But again, notice how, yes, we get some down close candles, but notice how this up close candle, this low never got closed below. It just keeps walking forward. You want to realize that price can only move forward is another thing. It can only go forward. It can never go backwards. And that's just a restriction of the market if you really think about it. So
And
it's
this is
always
why with CPI, once it starts making a move in a direction, it'll most likely keep continuing in that direction for quite some time.
it depends. It depends. Some CPIs you basically have two options. You're gonna trend like this, or you're gonna do what you do on Thursday, where you can go in one direction and then you basically trade the range of it of the news itself.
Yeah.
Or I guess technically it can Judas people, but that one's pretty rare for CPI anyways, because it's pretty obvious what the report does. So it's not so much to Judas people. But typically
Yeah.
it'll straight line like this, or trade the range itself of the news release, like it did on Thursday at 8:30.
Yes, I did notice that's why people like to trade the basically the red folder days or CPIs, because once it chooses a direction, it's just gonna keep going.
Correct, because you can't do much with the report and anything like that.
Yeah. Okay. Up close candles should support bullish movement.
They should not get closed below.
Correct.
Down close candles should support bullish movement.
Unless it goes into a fair value gap and it's just a retracement.
It should be a retracement.
Or yeah.
Sometimes those fair value gaps fail and they get shot right through.
Yeah, correct.
So again, it's kind of like some if-then stuff. This should happen. So if my FVG does get shot through completely, well, that's not a very good sign for that, or I might need to, reconsider, or I might be witnessing a shift, whatever. So, but again, notice the close never closes below. So then you're still waiting. If you really want to be technical, yes, we could say it closed below here. But again, if you kept your stop loss here at your bearish your bullish invalidation, or like your first defense, quote unquote, then you're still fine. Like if you trailed your stuff to the order blocks, but followed the up close candles as like super aggressive stuff, it should be fine, to be honest. Or a lot easier to manage if you just wait for the order blocks and like you wait for them. Because again, I want you to remember, if we waited at this order block here, or if we waited at this order block here, it wouldn't have mattered. It literally would have had zero impact on the trade. It always has zero impact on the trade, actually, for that matter. In terms of what the chart is going to do, it has zero impact on what the chart's going to do. So you want to remember that as well. You don't always have to trail every single time possible, because it literally doesn't matter if you do or you don't. So again, if we're going to stick to order blocks and turtle soups as the line of defense and the line in the sand and the defense, bullish order block, I don't know about you, but that down close did not get closed below at all. Not even a little bit.
But I would have never seen that as an entry. I would have only saw it as a turtle soup that just didn't form. Because for me, I would have needed to see a wick to go on there and wipe the
to wipe out this down candle.
No, those two last that pullback. I would need to wipe those.
Wipe this one out.
Correct. Yeah.
So I want you to notice in that it kind of does that already. So I want you to notice how you get a swing low here.
Yeah, I see it. The three candles.
Yeah, so you get a swing low there, and then think about everybody that bought this move up here. You know damn well they're super scared when they see this. If you bought up here and you're trading down here, you're thinking you're trapped. Just from a human standpoint. But yeah.
It's because of the order block.
Yeah, because the order block you can
the
trust.
Order block, it expands. Okay.
Yeah. And again, you can, because all you're really looking for is if you want to be super proper within technical, it's 50%. You don't want 50% of the body / the entire wick combo to be getting closed below, which it doesn't. It trades into the top half 100%, but it never closes anything into the actual under 50 or like even past it for that matter. I would stick with just past it just to keep it simpler. But eventually, and when you know what you're like truly looking for, you can use the 50% and know when like that's the thing to hold. And again, because all of this is already balanced especially something like turtle soup. If you see a turtle soup and then it goes, there really shouldn't be a need to come back for it. There really shouldn't be.
See, that is usually what I look for. If
So
I'm gonna
yeah,
place a trade and I see that, be
if
like,
you want
oh,
to look for that, that's totally fine. The order blocks you can just because you can take the turtle soup as an entry. You can just use the order block then as management. You don't have to use it as a trade because you're
now
gonna
there
see
has to
the
be
turtle
this
soups
place.
first and then the order blocks.
Okay, you see the after the break of turtle soup where I created the bearish candle. Now
This one,
that is not a turtle soup because shortly after it didn't displace.
yeah, you're saying on the next candle just wicked right
Correct,
past
but I
it.
know the
Yeah,
next one did. I know the next one did.
yeah.
Okay, but that doesn't make it an order block because it's supposed to do it right after the
Yeah,
displacement.
so like even for that, you
Okay,
wouldn't want to. So just a good general is you never want to short after a bullish turtle soup, and that goes back to the what we were talking about earlier about like what was your previous range? Was your previous range bullish or bearish? If you're hitting a turtle soup and closing well past it, like here, that you're coming from a bullish range and a bullish turtle soup, you don't want to short. The market's very, very more likely to keep continuing in that direction of the turtle soup before actually even remotely considering turning around. It's very, very likely that it's going to want to blow people out 5, 6, 7 times first, you know, trying to short it, and then actually turn around. But it's very, very rare to see it go 1, 2, and then just turn around. It needs to like blow people out of the water because it basically needs to do two things. It needs to blow out, in this case, every short that was there that's trying to hold it and think, oh, I'm good now. This is the pullback. I can keep holding.
yeah,
Basically think they're safe, blow them out of the water, and do that until they're committed to selling. And you're trying to bleed out shorts as much as possible to get them to hold it. You're also trying to get longs as euphoric as possible to think it's going to keep going for infinity. So when it does both of those at the same time, that's when it reverses. When in both parties, both retail longs are chasing and then retail shorts are bag holding, when both of those people are doing that at the same time, it's ready to reverse. Because you now have two sources of orders essentially coming to you instead of just one.
okay.
And again, you can play the rules, which is why I came up with them in the first place. So, because let's keep doing that, right? So the order block holds. Again, we're not concerned if we take that as a trade or not. If you don't want to take order blocks as a trade, don't take them. Full stop. I'm not telling you that you have to. That's not the reason I brought any of this up. It's so you can use it as a way to manage the move and see what's going on with it still. Because you're not always going to see turtle soup. I guess you will, actually. You will see turtle soup, but you will see other things besides that as well. And sometimes you don't get the turtle soup offered, and it just goes in a straight line without you, and you just have to sit there. So again, it depends on how you want to trade it, but we're going to play the rules. Again, what do we have? We have down close candle still. More down close candles. We have all these. We got our bullish turtle soup. So again, turtle soup should be the last thing to break. So if we're just going to use turtle soups, because even this dig into an order block is a turtle soup, right? So we're going to do all these. So again, none of these should be hit, right? Not a single one of these should be hit because they're bullish turtle soups. It only literally happens here. And it does what? Closes below it. So this goes back to our left to right thing. If we're trading, let me go like, if we're trading up here, right? And we hit a failure swing here. And then we do what? Up close candles. Close below. So now again, this could just be a pullback to keep going 100%. You can't look at this and know that it's going to reverse. Because it's impossible to know. But you can anticipate it when again you've made a monstrous move like that, and again you're getting both parties to finally cave. All the retail's buying it, and every short that tried to hold this is now completely bag holding everything. So you then have the other symbols with it. Your turtle soup finally got hit. You have a bearish fair value gap. So if you're actually now going to use these as signals for bearish movement, what should be true? FVG should hold, up close candles should support, down close candles highs should not get traded through and closed above. And that's exactly what happens. And again, that's why I have the FVG as like the candle you wait. If you're going to say down close highs, okay, cool. Use this candle, don't trail it down to this one. Or even this one for that matter. Because again, you're going to get a closure like this, and then you go back bullish. Now again, if you want to flip that rapidly and just trade every single leg, then yes, that's what you would do. But again, you have to then be willing to go back bearish immediately. But again, because you already came from a bearish range, you have that as a, hey, yes, this internal retracement, whatever, was bullish, because it has to be. It has to go up. That means it has to be bullish. Once it shifts back over and it's in a line with the higher time frame move, or just the higher market structure move, and there you go. You can carry it that way. And again, down close candles highs. Sure, it gets closed above here. But again, up close candle, I don't see no up close candle break at all. If you keep waiting. Or if you even put your stop loss at a turtle soup, because to say this is one here, which I'm sure you're able to see, you can just leave it there. Because again, the turtle soup should not get hit. If your turtle soup is getting hit, something's wrong. You either moved it way too much, or you didn't stop it at a turtle soup, or the market's actually not going to be going against you. So you'll see basically one of those four symbols, like those aggressive things, happen, and then the rest should follow on paper, because it should if it actually is. So, and again, now you just play the rules. Down close highs. And again, this is what I was saying with consolidations and all that stuff. You're going to get up close highs that get closed above. So you can't use the candles only as like the one-all be-all. You want to combine it again with the bearish turtle soups, like the bearish order blocks, / the up close candles in this case, to actually support
And the
the
bearish
movement.
order blocks should not be broken.
Correct.
Or at least the candles should not close.
Correct. Because even something like this, again, notice how we go up and then we crash down and then we sit there and then continue. This is the same thing. They can do this for infinity. They can literally do this move as long as they actually wanted to, if need be. Because I want you to realize this move right here is the same thing. You have an order block, it shoots down. Fun fact, in this case, you get a bullish turtle soup retracement to trade back up into it and then continues. This is the exact same thing here. It's identical. This move and this move are identical.
Okay, I see. Yes.
Yeah. And if you really want to get crazy, it's the same thing on everywhere. Notice how you have like an FVG here, just sitting here.
Yes.
Market trades lower, does a bullish turtle soup. It doesn't always have to do that. Sometimes it'll just make a double bottom. But again, bullish, 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 bullish. Hit that, and then actually go back through it. But they can do this move as long as they want to. They can have it take as long as they want if they need to, just to line up. Maybe they need the market to stall for a day just so the price doesn't move to its actual target yet, and to get dumb money in. And I'm hoping you can see it. I drew it here also. You have this down move, trades back up through it, turtle soup it, and then continues. And then you get your FEG to get out of the range, and then you get another one here.
Wait, how do you see a turtle soup there?
Here. You have an order block. You have failure swings. You sweep your failure swings. Do you agree that this is a turtle soup here? You have this down candle. This one sweeps it, closes below it.
Oh, Okay.
You see how this is the same?
Yes.
This is the same thing. It's just a longer procedure of the same thing. This is the exact same move. You have a candle. The next candle, quote unquote, this whole thing sweeps it, and that's a turtle soup.
So it's more of a shared validation when, let's say, a turtle soups while it's going into, let's say, a fair value gap.
Yes, 100%. Or an
Okay.
order block in this case. Yes,
Or no, okay. Or an order block.
astronomically stronger. And again, even if you want to play the rules, let's play the rules of just the candles. Because, oh, this is bullish. We're bullish. Cool. Up close, up close, up close, low, up close, low. Where does that happen? Here. And if you really want to be super technical, here also. I would say we'll be generous and say not this candle, but we'll say this one then. Closes well below it. And again, what do we do also? So not only did we close below this up close candle, we turtle souped it as well. So that provides us candidate for this being an order block. And again, from the higher structure perspective or left to right, because again, we came from a bearish range. From here to here, this is just the retracement. Whether we know that, actually, we don't even know this is a retracement or reversal, like this bullish leg here. But we have something that occurs that it shifts back bearish. So we're expected to be a retracement while we came from a bearish range. Because yes, we'll get a bearish range and then we'll get a bullish shift and then it'll take off. Or we'll get a bearish range that continues. More often than not, you're going to get the one that continues. And the same thing for what I said for the bullish case, but very, very likely to just continue. And again, if you're just going to play the candle rule, well, there you go. And or if you would just want to wait for confirmation, anything like that, there you also have turtle soup, close below, and then even if you don't take that, you now have an FVG to take afterwards. And you can play the same rules. Down close. Okay, this is bearish. Down close candles high should not get closed above. And they don't. Like, yes, the body closed above, but again, the high is all the way up here. Or, again, you have the FVG candle to use as well. So like how you were saying, how it wicks above the FVG and closes back into it.
Yes.
This is that. This literally is that. So, let's say if you wait for the candle to close, like it actually closes, then you can always use that. If you do it mid-candle, then it's not right. But look at a smaller time frame. This is how, when it looks somewhat confusing on there, this is when you can use a smaller time to confirm stuff. So notice the
Fair value gap.
yeah, that we're hitting. And notice the super strong moves out of there every time. As well as just getting rid of all of this. Notice how we get a 5-minute fair value gap. So like how you were saying, if you want a higher time frame into a smaller time frame, you're better off. You can use the smaller time frame when the higher time frame isn't presenting one, if anything. But I wouldn't try to use a 15 and then copy paste that into a 5, if you see what I'm saying. So use like for example, use the 5 if the 15 isn't providing, or if the 15-minute is just too, or not sporadic, but like too consolidated. Because again, even on the 15-minute, you can see how you can remember how we can see that you're sweeping this high, right? So we understand that that's a turtle soup in itself.
Yes.
Okay, so if we can see that on a higher time frame, then we can go to our lower time frame and then look for the more specific setup there if we want to. But if we need to be able to spot something on the higher time frame first. That's the most important thing. But I would either be looking for something on like this, like higher time frame, just idea or setup, and then going into the smaller for the details. But I wouldn't be going I wouldn't be going 15 to 5 minutes to look for the exact same thing. The higher time frame already is giving you the bias and the direction. You're just using the smaller time frame for risk.
Yeah. Okay. So all right. Yeah. So I'm using the high time frame to find my basically my bias,
Yeah.
and then to find my entry, I go into my lowers
Mm-hmm.
on the 15 minutes
Or whatever you're using. Yeah. Because again, even
Uh,
if we're gonna play the candle game on like the 5 minute up close candles, lows holding, sure, breaks right there, FEG and retracement. Now again, our bullish order block is still here, so that's what I was saying. You got to remember that the bullish order block and the bullish turtle soups are going to be the last thing to break, because they literally will be. Because you're going to see the candle shifts and everything first at the top, or like your FEGs, or like your bearish order blocks. You're going to see all of that at the top, but your bullish turtle soup and your bullish order block are going to be sitting at the bottom. So now again, if these upper deliveries, what have you, are going to hold true, then yes, they should not get hit at all. And the order block holds. And again, FEG and retracement, one of the stronger things to use off that already. So, or again, just separating. If this is our order block, because we have two up close candles here, get separated by this down close. If this is actually a order block here, closes below it, then this should act in support price with the bodies and everything, and it does. And then again, we get our FEGs afterwards for just our continuations. So like that Friday short, we're getting the FEGs on the first and second stages of, hey, we're already leaving. But you're going to see your order blocks, turtle soups, and all that in the start of like the shift. And then you're going to see the FEGs and all that in the second half. And again, even something like this, I'm sure you can kind of see it already. Order block, trade down, we get a turtle soup just for a retracement, just to keep going.
mm-hmm.
So again, you don't want to just spam down close candles highs, closed above, woo. You know, you don't want to do that. You want to combine that with things like the FEG or the order blocks as like true invalidation. So, or the turtle soup for that matter. Like if this is a bearish turtle soup because it's a IOFED rebalance, ITH, whatever. To trade up into this is your invalidation. So you can keep it here. You get another turtle soup, you can move it to the other turtle soup. So like your bearish stuff was never broken. And that's what I was saying on Friday when when we were talking about the invalidation was never broke. This is
Which
what,
is all the way at the top.
not even that. It's just this.
Right. Yeah, correct.
This was never broke. So you're going to get, again, like how we first talked, you're going to get the retracement to it, sure, and it's going to be bullish, 100%. But if you're going to be that aggressive with it, be willing to let it go back bearish and don't just bag hold through it. You want to be going back and forth to whatever the market's doing. Or if you just want to trade higher time for or a higher structure, then yes, if you came from a bearish range, more often than not, bearish to continue. Or if you're coming from bearish range, let the bearish shift occur like this, let those signs occur, and then take it.
Yeah, which will be it never broke, so okay.
Mm-hmm. Yeah, that's the other thing too. Like this never did anything. But again, if you stay off a 1 and stay on like a 3 and a 5, I think it'll do a lot better for you. And again, I want to say for like this picture, again, if you're anticipating this to be a Judas and you have your shift present, that should be it. You don't want to look for extra confirmation. Not that you don't want to, but like smart money is not going to they don't want people in. They don't want shorts in, I should say. They want every long in possible because they're going to collapse it. But
Yeah.
they don't want shorts to get in because then you're just going to take their orders and get in their way. So,
See, for Monday, that's exactly what I'm expecting for Monday. So if I'm looking at my, what is this?
yeah.
On the hourly, it's coming down, coming down. There is a big, humongous, giant fair value gap right there,
Mm-hmm.
and I'm expected, and I'm on MES. Um, Fair value gap, and now I would like it to go in there, and once it goes in there, that's where I start looking for a rejection. Once it
Into
starts
this
going
one,
into the fair value gap, correct.
the 10 o'clock one. Let me see.
uh, 10 o'clock. Yep, 10 a.m. So usually, once I start seeing that it's in there, then that's when I go low time frames. Okay, I'm looking for that rejection.
Yeah. So I'm gonna give you a hint, and this is gonna be a recap of what we were talking about. Actually, let me check this first. Yeah. So actually, Easter egg slash bonus. You remember when I talked about how when you see stack failure swings like that, you should not anticipate it to hold. You have like 1, 2, 3. There's no obvious manipulation or turtle soup there,
Okay, yes.
and then it crushes it. It's just another example for you so you can see it. If you see something like that, very be inclined to think those are not going to hold. Or even if
Is
they
that
do hold, they will be broken eventually.
is that the same thing as the step ladder that I keep seeing going into a fair value gap? Because I do see those
Yeah.
fails all the time, and I usually
Yes.
take them.
Because if you go, I guarantee if you go on a higher time frame or like a customized time frame, quote unquote, it'll look like all just failure swings. So yes, it will do that. It's the same
So
thing.
yeah, so if I start seeing like it's step laddering up there,
Yes. Let it
I
stair
am like,
step. If you want to wait for
yep,
confirmation, let a bear shift happen. What have you? Let a bear shift happen, then take it, and then run through the stairs.
yeah,
Or, but again, how can you anticipate where you're going to get the retracement? Is there any? And if you have to look to the left, is there an order block or an inefficiency, whatever to go for? Because again, when we talked about the 60 to 70, that's how you can anticipate. Okay, how far is this retracement coming? Once you see the retracement, or you can see
that
that
one
like,
I
hey, I know these
understand.
lows are getting hit.
Yeah, that one I understand, but it's just like my brain can't register it fast enough.
Yeah. Well, here, maybe this one will help then. So the whole here's the thing with your 10 with the FVG here. Do you see how it already got hit here at 3?
Yes.
Okay, so it's got the one tapper. So I'll be honest with you, it should be okay. So a more realistic thing, because so you remember how we talked about how if the market is balanced and it leaves it, it can't teleport. So
Yes.
really, all of this should not need to get touched. This FVG from 9. You see this? It might need a body actually. I also need something. So maybe it will then. But the whole reason I'm talking about that is, oh, I might need that actually. It's probably gonna need that. Yeah, realistically, I would expect this done. This 6072. But the thing that I was going to mention is because just the idea of how we've had buy side all the way up through here,
Yes.
and then we get our sell side through here. If
Yes.
we've had buy side from here to here, from 62 to 84,
It will need to balance it out.
it shouldn't need to balance it out.
Wait, it shouldn't or it should?
Should not. Now, what's important to remember is 62 to 84 had buy side, right?
Uh-huh. 62. Yeah.
62 to 84 had buy side. And then we had sell side from 84 to we're just gonna say 40, just to round it. Or yeah, 40. So if you look at what's left, it really would be 40 to 62, right?
Okay.
Does that make sense? How it's 40 to 62 still needs buy side?
Correct. So there'll be
So you can think of you can either think of it like as a y-axis or just like a brush. So we went 62, right? From this low to this high, we went buy side. And then we went from that same level to now this level, we went sell side.
okay.
So if all of this is good, it should only need to come back to here to keep going. Now, looking at this more, and only because of this RTH chart, I'm willing to allow it to, for some reason, print a body there. But realistically, or typically, I should say, I wouldn't look for anything further than maybe this high to keep going.
So I'm expecting it to go. Well, not expecting it, but I would like it to reach that high and just like go right above it, and then just start coming down.
Which high? The 10 a.m.
Which is
high?
60. What is that? That 60.
Yeah. Like I said, I'll let it come into this just because it's just fair value gap after fair value gap, and I'm sure it's some gap somewhere. But I would not expect the top of the 10 a.m. candle to get hit then. And I definitely would not expect the 9 a.m. to get hit. So what's going to be cool, and you can leave this as a thought experiment or just there, a buy stop from 76 to 85. That's the whole trade. You'd capture this because you know that if you hit this, the range is balanced and you shouldn't hit it, you can basically trade to this. And if you really want to go crazy, you can trade past your turtle soups and really go to like 97. Which at that point, it'd be rude not to. You go for that and hit all these. If this is a breakaway and there's no need to actually hit this. Now, you can absolutely react off these levels 100%. So you can make a deep retracement and then continue past it. But the idea is that it should just straight through it. So the market should be seeking something elsewhere. At least how I'm viewing like the price and the balancing and everything in the buy side and the sell side. Of like what's offered and what's not.
Because I'm assuming, I mean, if it does that, it has to reach for the, what's the low here? The sell side.
The down close candles highs and everything. Yes, it's wicking above 100%. 100% wicking above. Don't even think for a second that it's not. But
Is closing under.
yes. And because that's so important. It's not a 5-minute or something super small. It looks completely bullish. And that's what I was saying. If you're going to play the candle trail game, you got to be careful when you go smaller time frame. And you don't use those shifts as actual confirmations that they're shifts. You want to stick to the higher time frame candles that you're basing your direction off of to validate that. Because otherwise you're going to see something like this in a 5-minute where it looks like completely bullish breaks. When on the 5-minute structure and in that moment they broke, but on the higher time frame it was nothing. It was just delayed movement.
Yes. All right.
Yeah, because even this last up close candle and then a huge down move underneath bullish turtle soup that broke, right? FEG reloads it turtle soup. So bullish turtle soup should not be broken, right?
See, but on the 2 hour already went in there, and it's coming down already.
Correct. So you can use that to frame like day trades or even swing trades for that matter, like intra-week. You can do that as well. Because if you can just run a string of blues for a day and a half day trade, and then see what happens. So, but again, even like this, we should still play the rules. Down close candles high should not be getting closed above. That's what I was saying. I don't want to see this FEG, this top one touch at all. Like it literally should not be. We should definitely chill something upwards in here, or even like where this gap was, to keep going. And it's a rollover. I didn't realize that, so we might get trolled.
And it's that you're also looking at that turtle soup on the 2 hour, right? Also, that it came it came up right to it.
How about this one here?
No, not that one. Or at the bottom
over here.
That one right there. Where you have your your box that goes right across.
How about right
not
here?
That one. Right above that.
This.
Not that one.
These.
See where you went right across, where it bottomed out.
This.
On that leg right there.
This is a bullish turtle soup, yeah.
Correct. Yes. So, but I'm looking at that red candle that actually is the turtle soup. Swept under. Okay,
Not
and
even that,
then
just this previous candle. You know, it doesn't have to be
you,
the down close candle. You're talking about this bullish move right here, right?
correct, yeah. But that candle, that red candle right there, which became a turtle soup.
It became yes, it became an order block.
Yeah.
Is really what it did. Good order blocks are gonna do turtle soups.
Yes. Okay.
So yes, and again, what happened? Up close candle low, up close candle low, up close candle low, up close candle low. And so if we're gonna look at turtle soups from there, okay, cool, we can see one. Great, hooray. Let's keep going. Down close candle still supporting. BISI, bullish FEG, whatever, continue. Turtle soup, and same thing. Notice how these down close candles are not getting closed below whatsoever. Not even a little bit, right?
Mm-hmm.
Still going, still going. Again, and we have up close candles lows to use. But again, if you want to trail your stop loss, use the turtles and the order blocks. Don't go candle per candle, be super aggressive. You can use that for entries or re-adding, I would say. Or just use the order blocks for re-adding, but that would really be it. But again, down close candle. I don't think that don't look broke to me, buddy. Keeps going, keeps going, keeps going, keeps going. And only is it here / here if you even want to go there, or just this turtle soup. All of this breaking all at once. Whatever of these three you want to use, or even knowing that this is a breakaway gap, but I would not expect you to know that. But this is the same idea as this, just so you know. These are both breakaway gaps. The moment this was touched, this range was dead.
And you can tell because it created a fair value gap and it went right to it.
No, but you can tell it created a fair value gap that was going through a range that was already balanced. So there's no need to come back for this at all, and it came back to it.
Yeah, that's what I'm saying right there, where it came back to it.
Yeah, this shouldn't have happened. To
Now,
be
once that
bullish, this should
happens,
not have happened.
that's your shift.
It's correct. It should have. Yeah, you could use that as a shift, because those especially, you get those one chance, and that's it. Is maybe as a reaction, but other than that, no. But so you can use that as a shift, but those again, just like this one, they'll never get touched. You see what I'm saying? So you
Yes.
can't use them as. You just want to use them as indicators, as like stop losses essentially, or like directional things. Like the breakaway should never get touched again, realistically. But you have to recognize what a breakaway is first, of course. But
Yeah, I have to keep like going over and over it again until I get it.
yeah,
Because I can see it now, but I bet you when I go live, I'm just gonna be guessing.
nah, dude, you
Wait,
gotta.
is-
Your best thing you can do is in real time just talk about what are the candles doing,
Yeah.
especially the rules and everything. Like I even so like on my Nasdaq trade that I took that I botched, like on Friday. I'll show you on what I did on Friday. So I took this short, right? That was I mentioned earlier. And I woke up, saw this, closed below, turtle soup, sold it. Cool. I ended up closing like here. Actually, now like this green candle. Instead of actually following the rules and saying, hey, down close highs. So I watched the market go like another 30 points.
Oh,
Yeah.
okay.
So the best thing you can do though is in real time talk about what is actually happening and seeing it. Because again, even I was watching this. I watched this turtle soup here. I was like, okay, I see this. This should not be closed above at all if it's bearish. A turtle soup should not get closed above if it's going to be bearish, right? And what down close highs, right? Classics. The same logic here. You just use it again, right? So same thing. Order block, FEG trades up into it, keeps going. Another FEG, get another FEG there. So even this, the down close candles highs are not getting closed above at all. And you get another one here. And then I don't know if that one fills, but either way, realistically, even if you follow the rules perfectly, you're still holding this, and then you would have got taken out at the top of that, or you exit because it's lunchtime and what have you, and anything else. But again, it'll save you a lot, and the best way to learn like is just to talk it out and say what should happen, and then see and act accordingly. Because it's not gonna. You want to remember this thing actually goes really, really slow. Like this thing actually moves very slow. You're literally just watching like one instance in time and like one tick show up in price, and then it goes to the next tick, and that's it. All the stuff and how we feel about it is just like our own interpretation of it. But as nothing, but this is all just neutral information. You want to remember that. So when you're looking at it and trying to, do it from objective or just clear mind, what have you. If I'm bearish, what should happen? Up close support, SIBIs, down close highs, not closed above, the whole jazz, right? That's it. That's all you can do anyways. That's what you just want to be sure you're doing in real time and just asking those questions. Because even when it's chopping like this back and forth, the delivery is still going to hold true. Up close lows, okay, sure, closed below here, okay, but then gets closed above. So yeah, even if you're going to play the rules, it's shifting back and forth a bunch. But that's just what it's going to do. Because it's what the thing is, So even something like this, hopefully you wouldn't get baited. But even if you did, you get the shift back over, and then you can play up close candles lows all the way through, down close support, FVG, down close support, FVG, down close support. So if you just walk it through and basically say it out loud, and just mark some invalidations where you know that, hey, not only is this going to bust me out of my long, I can also go short hitting this. Because you can anticipate moves like this where you set up in the middle of the night and then you just start ramping. You can anticipate sell models like this to occur, like preemptively, essentially. Maybe you don't expect this strong of a Judas, which I didn't either for that matter. But the logic was the exact same. You're going to eventually pair sell side with this. You're going to smart money reversal at some point, and then you pair sell side with these lows under here. And it is such a more common pattern than you think. But yeah. It's just something you just want to talk about and look at and do. Again, same thing here. Ramp up like crazy. Right? Ramp up like crazy. Get everybody. There's your shift. All the bearish delivery that should hold true happens. And again, notice the coming from a bearish range. Hit this as a turtle soup, and then you keep going. Same thing here.
Yeah, but then you will wait for that turtle soup to be broken before deciding to make any entry.
Which one? The bullish one, like this one here?
No, on the short side. Where it did the market shift right there, yeah.
You're saying here?
Yeah, correct. So you would wait. You would wait for that to break.
Yes, you wait. Yeah, your turtle soup. When your turtle soups are breaking, you're very likely to be reversing.
Okay.
Because those are when I say lines in the sands, those are literally like places that you can use to flip your direction. Not just stop you out of your trade. You can literally flip your direction if you hit them. So, but again, you might react off something like this and think, oh no, it's actually bullish. But more often than not, it's especially when you just see moves or you got to remember, turtle soups you're stopping out liquidity. So if you have something like this, and everyone hops in here and puts their stop underneath here, you run that out, and then you can keep going.
Yeah.
This is this exact same thing, just reversed. You have your shift. You have this internal run set up. You push lower. You sweep that out, and then you keep going. This is the same thing, just reversed. It's just literally just upside down. You see what I'm saying? Yes. This is the exact same thing, just upside down. This is like, you see the left one, you see the right one. They're identical. That's a high. That's a range, whatever, bullish range. Runs the swing low, keeps going. Bearish range sets the high, runs the swing high, then keeps going. Same Identical, literally identical. But if you ever have a super big Judas, quote unquote, up like that, that's when you can anticipate that once you get your delivery back over, you're just going to pair it with something. And you can anticipate just a whole market maker sell model ahead of time. And that's what Friday was. Just super, super bullish, get everybody bullish. So by the time you wake up, you already know you're looking to run this lower and just crash everybody.
Such a sweet trade, but I would have never seen if it wasn't because of Tanya.
Yeah.
So
It's a very common model. Extremely common.
and I need to keep see. This is why I'm always on. It's because I want to see it happen every single time. This way I know.
Well, it's not that you need to see it happen every single time. You just need to.
See, I'm visual, so I need to see it. So you can explain it to me, but seeing it happen, it just sinks into my brain.
Yeah.
You know,
No, I get
it's like
that. But honestly, you don't need to see it live to learn it, I feel. Because the only way to see it live and in foresight is you have to see it in hindsight. You have to see it after the fact that it happens, study how it happened, what did it look like, everything like that, and then only then we be able to see it in real time. Because again, if you remember when earlier I mentioned the market can only look backwards. If you're all the way up here and your delivery shifts, what are you looking at? You can reference, you can look at this low, you can look at all these lows, and then you can look at, this low all the way down here. So if you see longs over here, these didn't exist, so you can't use these as data because it wasn't real yet. So you don't want to look for longs on that. You'd only want to be looking for shorts. Or any long that you see is very likely to be fake.
See, because usually when I take the trade again, when I go to take the trade going in the opposite direction, I look for a sweep of liquidity, but there's like nothing there.
Yeah, because there isn't. Sometimes there actually isn't, and it's referencing something completely different. Because you got to remember, even on because we'll go through. Obviously, we've been buying like crazy the last months, but you got to remember, we'll go through market maker models. Kind of one big old swing like that. Or even something like this smaller one. But again, you can apply the candle trails, and if you figure out which side you're on in a market maker model, because remember, the smart reversal has to occur from somewhere. So you have to be looking back from somewhere at all times.
And I'm always thinking the market is going to be coming down because it just swept like a daily liquidity. It would keep sweeping those daily liquidities. So.
Yeah. So that's what I was saying. The market's much more likely to keep continuing in the direction it's going. So if it's sweeping daily highs, it's likely to keep sweeping daily highs.
Yeah.
Yeah, because it's actually bullish. It's not doing it to sweep them. It's doing them to break all of them. So that's super important, if anything, because you just want to recognize where it's coming from. And then just using that accordingly. And again, we can trade this right now or just in the future, down close highs, see how long till it breaks.
All because that is a turtle soup.
This one is, yeah.
That one, yes.
Yeah, so if we're gonna do that, that's what it looks like in a smaller time frame, but we can play the delivery even right now in the 15, which should be holding true. Up close candles should act as support / order blocks, whatever. Down close candles high should not be getting closed above. And again, we can see the down close candles highs like occur here, for example, just to retrace. So again, if we're going to be doing that, we can use that, but we got to be willing to shift back bearish then when the rules call for it.
Correct. That's what I'm saying. So I will be waiting for it to reach into that area, and then I will go into my lower time frames to look for my entry, which would be a
Yes and no. You're not waiting for that area. You're more so waiting for that shift to occur. Now the shift should occur in a specific spot in price, yes, but it should occur at a specific time also.
well, the whole 9:30 to 11:30
Mm-hmm.
or
Exactly.
8:30.
Yeah. And again, it's even possible you get something out of this FEG just to react. But it could just all be fake because you got to remember you're looking backwards. So if your delivery's down from here and you're looking backwards, what do you have as reference points for spots? Like if this is going to be a sell model.
Order block right there.
Yes, like you have something like this or just the lows in general that we were talking about going for.
Correct.
So we would want to see really maybe, sweep up into this. This order block should pretty much hold. This breakaway should not get touched at all. Really shouldn't.
Because it reached up to also that order block to the left.
Yes.
Your arrow is pointing at it.
Correct. Not even that, but more so just the way it traded. So even going back to the numbers and the balancing, we have this consolidation here. I'll just do it. We have this consolidation here. We offer sell side and then buy side through it. Right? And then we trade back down. Then we trade back up to the consolidation. Then we leave it. You see how this is that? So there's no need to trade back up into here. That's the real reason that it's a breakaway, and it's basically dead if it gets touched. It shouldn't need to come back higher than that. Shouldn't be any efficiency there that it needs.
Okay. All right, so I am looking at it. I just didn't know that also that the turtle soups form on the lower time frames. So
Yeah.
whatever is I see on the higher time frames, it's also referenced on the lower time frames. But once I have my bias on the high time frame, then my trades on my lower time frames are going to be based on that bias.
Can you say that again? You're saying.
My lower time frame bias. I'm going to go into my lower time frames and I'm going to base my entries based on my long term on my high time frame bias.
Yes. Yeah, you're doing the lower time frame for risk.
Yeah.
Or sometimes like if you don't see a setup on a
high time frame.
Yeah, so like how you didn't see the FVG or like on oil, we didn't see the FVG on the 15-minute. All we saw was a turtle soup. We just swept one candle. And then
Yeah, correct.
But then on that 5-minute we had an actual setup for it.
Yeah, correct. Okay. All right. Now it's making a little bit more sense.
Yeah.
So your numbers little area was like, I understand it, but
yeah, that just has to do with buy and sell side delivery to understand like what's actually efficient and what's not in the market. Like you can see how like this FEG, it came back to it. It's because it had to get fixed. All of this above shouldn't need to get fixed.
Correct, but that's an order block right there, right?
This?
Right there, yes.
It is, yeah.
Yeah.
But the reason it didn't trade up into it was because that's not what it needed. It needed this FEG. You can see how it's just a buy side, and then a sell side, and then a wick. So you have 1 and 1, and then you have 0. Or you have 1 wick. So you basically need a second wick in that area.
But those are just reference points, right? Like
yeah, but they're reference points because they're inefficient. They're not traded.
Yeah, correct. But what I'm saying is you mark them, but but you see what it does when it gets there. So like if that wasn't the area where the market was going to turn around, then it probably would have done in the order block. So then the order block would have been your reference point because that's where I started doing the
Mm,
shift.
kinda. You want to
But in this case,
so you want to use these inefficiencies slash reference points as places to go to.
yeah, correct. Okay. And
You're
you just
not
want to see
using
what it
them to
does.
see what happens when they get there. You're using them as places to go to. You're not using them to. I'm not looking at this inefficiency to frame a reversal. What I'm looking for is when my delivery changes and it starts to do bullish crap. Where is it
Uh-huh.
trying to go to? What could it potentially need? Because remember, it can only look backwards, so it can't use this. It can't reverse off this if it's not there yet. It didn't know that. If you're starting from here and you're bullish, this is all you have to go off of, is this leg here. So if you look at the inefficiencies, or just look at this range in general, we were trading pretty cleanly through here. We're wicking, trading through everything. This entire FVG here is basically traded through efficiently. It doesn't do, you know how when you see like the quick FVG, like where it goes like bam and then bam, like 1,
Yes.
2.
Uh-huh.
This one, it goes back and forth through it fully to balance it all out. So there's no need to trade back up into it at all.
Okay.
So you have this inefficiency here as the highest one in the leg, technically. So that's what you can use as a target, or just an anticipation of where it's trying to go. You don't have to use it as a trade, for one. You don't have to trade off it at all, but when you're looking for where to go and where to use lines in the sands and like where the last place price should hold, that's what you want to use it for. Because you know that if you hit anything up in here, you can rip through it. You can literally put a buy stop here and go through it. You don't need structure or an order block or an FEG or anything. You can literally put a buy stop here and go to there. Once you learn how to like actually balance his range. And that's the same thing with this. You knew that nothing in here should have held. So the moment your bullish turtle soup breaks, everything hits the fan. And none of this has any business in holding whatsoever.
That's because there's nothing there. The only orders are on the
On the
liquidity.
sell side itself.
Yes.
Yes, on the liquidity itself. There's no inefficiency. If there's no inefficiency, it's allowed to shoot right through it. That's what's so important. So even like this, we were talking about on Thursday. Or no, where's it? I'll go on the yes for you. Even with this, so if we're balancing all this, right?
Uh-huh.
We're trading buy side, sell side, buy side, sell side, sell side. This is our smart money reversal here. This whole thing, plus again our turtle soup, if the market needed this FEG here, it would have gotten it. If you think about that. So you want to remember this thing controls every movement it does. Unless someone shows up and manually does otherwise. Other than that, though, it knows exactly what it wants to do at what time and how it wants to do it. So what I mean by
after it created the leg.
What was?
Because it just swept all those orders.
Yes, but what I'm saying
Yeah.
is
Uh-huh.
the idea that if the market needed to retrace to this fair value gap to continue, it would have done it. It didn't, though. It stopped at this one and then continued. So if it really needed this, it would have gotten it because it has the ability to. So if
I get what you're saying.
So if it left this and you already did all of this back and forth trading, buy side, sell side, buy side, sell side, offering, because again, you got to remember what is an offer. If it's offering buy side, that's an up close candle. If it's offering sell side, it's a down close candle. So if it's doing all of that efficiently, notice how there's no FVGs, nothing here, whatever. It's just super right up into the order block, 50%, whatever, up into the order block, like super balanced. Like a lot of paintbrush strokes up and down, up and down, up and down, up and down. So if this is all balanced, there's no need for it to come back to this. If it needed this, it would have gotten it. So you know that it doing this means that it didn't need this one or it didn't need this one. So by the time you do hit them and you react off it, or you hit it and you react off it like this hammer here, you know it's already dead anyways. Before it even happens. Literally, as it's touched, you know that you can run for this low. Because if it really needed this, it would have gotten it the first time, and then it would have continued on to wherever it's got to go. And just to finish the model or wherever it's trying to do. Which in this case, finish the CPI range. And, again, remember you can go on higher time frame and just chain some candles together to see. And again, even though you might say, oh, this, closed below completely, even though this is a 2-hour candle and you want to wait for the candle to close, if you're going to see a move on the smaller time frame first, and then it'll show up on the larger. So we know that from here was like our quote-unquote our breakdown, or like our up close got closed below in a 2-hour. But let's see how low that happens on a 5-minute. So on a 2-hour, this is that same line. But if we're going to say up, close, lows, what have you, or just even bullish turtle soups failing, you have this, all this shindig failing here, whichever these three. Maybe you shouldn't use this one, but mainly these two. You also have up, close candles, lows, close below. You have this fractal one here, and then these two. Plus, throw in a little bit of turtle soup action. All of a sudden, your 5-minute shift is like here, but your 2-hour is here. Even though it's the same thing. So you want to remember that if you're anticipating some type of move like that, if you're seeing it on the smaller time frame first, you're going to see it on that, versus you having to wait till this candle to close to be able to say, oh, down close, down close, close below this one. And then looking for the next candle to not trade above the high in this case. So you're going to see your small time frame stuff first, always. But that's why you always got to be careful with this, because it might look like a shift. And it might be real, like in this case it was, or it might not be. You could get trapped in something like on Thursday. But for everything we've been talking about today, for sure, just using those 3-4 ideas for following the immediate delivery. And then turtle soups to just protect and see like where you're actually trying to go. That should be good to go. So
I'm trying to register it. That one kind of caught me. Okay. I think I get it. I think I get that one. Whether, the order's getting filled in. So now I know there's nothing there. So the orders get no fair value gaps. So that just shows that everything is getting balanced out.
yeah.
So when it reaches a point of liquidity,
If it reaches that point, you could already anticipate it not holding. It's the
correct
price.
Because there's nothing there.
There's nothing there to actually hold it. If it needed it, would have got it.
Yeah.
If it needed it, it would have got it. But again, you'll see. That's why you'll see like fake reactions and things like that. Like I can show you one on Tuesday, I think. Or was it Monday? Oh yeah, it was Monday. So you can even see like on this one. there was, you can see how this first fair value gap is like the only thing that's really there. And there's nothing really else afterwards. Just wick, wick.
Uh-huh.
So you can anticipate reactions out of spots like that. And not even anticipate, but you can be open to them, I should say. But if you see them, you can still anticipate them to roll over. Like even this, let's play the previous range again. We came from up close, lower, up close, and then shoot way lower. So again, what is this? We do a little turtle soup here, pop, sure,
Uh-huh.
to retrace, just to come up and then continue. It's just an internal run. Came from a bearish range. That's what you got to be looking out for. And again, even if you want to play, again, the candle game rule, go ahead. Up close lows, up close lows, up close lows, up close lows. Turtle soup. Why is it a turtle soup? Because it traded into FEG. So that is one example of a turtle soup. Closes below. Down close candles highs. Should not get closed above. FEG present. Another signal. And then just trade it the other way and see what happens. Because if it is bearish, those things are gonna be true.
And then see, the
And
first one didn't get traded into. It did it on the second one.
correct. It didn't. How about this one up here?
Yeah, the FEG didn't trade into that FEG.
Oh, this one here?
Yeah.
Yeah, it didn't need to. So, and again, this goes back to the balancing thing. When you're looking at price levels, what you really have to look at is that price level individually. You basically have to block out everything else. So, what I mean by that is you'd have to basically be looking at only this. For example, you can make the block or like how big you view it, however size you want, but ignore all of this and just focus on the white right now. You want to see from this range, just these levels, whatever level you're looking at, how is the buy side and sell side offered there? Like here we have a sell candle, we have a buy candle, we have a sell candle. So reading this left to right, we have 2 sells and 1 buy. You see what I'm saying?
Yes.
Right now it's an uneven count. It's 1 and 2. 1 buy, 2 sells. So as we keep scrolling through this price level, nothing's happening. Cool. We hit this one. Okay, so now we're 2 and 2. Now we're 3 and 2. Now we're 3 and 3. So when you see something like this, a consolidation and an even count, and by even I mean like I should say an equal count. If you've already balanced this level, this price level specifically, 504 to say 512, if you've already offered that, you've offered buy side there 3 times and sell side there 3 times, it's an even count, it's an equal count. It's very likely that as it leaves it, it doesn't need to offer that price level anymore. Unless it leaves some super obvious inefficiency for whatever reason from there, that I have to come back and fix that. But if you can find an equal count, it's pretty much balanced. Either 2s, 3s, 4s, it doesn't matter the amount. But that's how you want to determine if it's balanced. So if you see like 2 buy and 3 sell, it needs a third body. It needs a third buy body to equal out. It's literally what it's doing, is equaling itself out to offer everything efficiently as possible. That's why even like this here, you can see how it's just trading down, up, down, up, down. So it's offered buy side, sell side, buy side, sell side, buy side, sell side. 1, 2, 3, 4. 1, 2, 3, 4. If you just want to, again, you look at that price level and that entire thing, and just keep going backwards to it. Not infinitely, but enough to count it. But that's why it only trades essentially to this down candle. That's why it stops here. It doesn't need to trade back into this anymore. It's already offered everybody enough times. So now it's going to be seeking somewhere else. That's why it doesn't get touched afterwards. Or when it does get touched.
It's the turtle soup.
Yes. So, but again, at that point, that's just a time distortion of sit here for forever and then actually get people out.
Yeah.
But in terms of anticipating where you can get a retracement from, that's really what you want to look for. Because like especially the first FEG like that, or if you see something like a breaker like this, which is really what this is, this should have never been touched. Like you would want to see this one not get touched, if anything, on your short. And then you have FEG and retracement still. And then you can just retrade it. And again, down close candles highs didn't happen also. So you can have a rule as you're watching price to see what happens. Because worst case, it's going to close above and then you get out. Best case, it's just going to continue in the direction it's already going, which is a lot more likely anyways if the delivery is actually bearish.
And a lot of that is based because of that big giant displacement
Mhm.
on the 3 candles that you were showing me earlier at about what is that, 11:30, 10:30,
These?
right there. Yeah, correct.
Yeah,
It's because of
so
that big giant displacement.
so all the sell side, all the buy side, all the sell side. So if this is already balanced because this is 1-on-1, it's really just fixing this SIBI.
Yes. Okay.
So it's 1,
That makes a
2,
big difference.
yeah. So it's really just the 1 and the 2. 2 and 2, so then it's just, this is just the leaving phase. So it left with an even count. That's actually probably a better way to put it at. We obviously had our 1, and then we had our 2, then we had our 2 for the sell to fix the buy, and then 1 and 1 for leaving. So again, but that's what's so cool though. If you touch this now, you can anticipate the range high getting hit. And you can do that back forwards through everything. So again, your turtle soup should not be hit, right? So if this is a bearish turtle soup, this shouldn't get hit either. These should not get hit either, these up close candles. And so you can keep going. If that shouldn't get hit, anything inefficient here? No. And again, same thing here. Notice the exact like similar pattern essentially. We have all this balancing prior, and then it's just the 1 and the 2 to leave it. And we're balancing this out to fix whatever this is. So we're fixing this while we're fixing this while we're fixing this. So we're fixing this price level, and then these prices up here. And then you can see that's how the BPR or the BISTI and the SIBI form, but they're actually just breakaways. You're not actually looking to trade through them, or trade back into them, I should say. Because that's how they'll form smart money reversals and trap people. Because again, think back to Judas. You see this rocket move before. What is everybody trying to do when they see this?
They're trying to go long.
Everyone and their mother wants to go long, right? So, and again, bearish turtle soup breaking. Plus, again, balancing the range. You anticipate this not wanting to get filled. So you can literally sell it right away if you wanted to. Just as it trades up into it. And then again, play the rules. Down close candles highs and FVGs. Or SIBIs, whatever. Continuing. Up close candles supporting. Because again, yes, oh my gosh, a down close candle high got, nearly closed above. Again, use the other stuff with it when needed. If it's sitting in an order block, use the order block. And just use that as your invalidation. You don't have to use candle trail only. And you don't want to use it only either. You want to use them in combinations. Or again, if you really aren't sure, use turtle soups then. Because those are the last things that'll break. So even if you're going to use this all the way up here, fine. Use this as your turtle soup stop loss. And just wait there then. Because again, I remember if the stop loss doesn't get hit regardless, it has no impact on the trade. So if you kept it here and you held all the way to here, like say you were going for these lows down in here, like that was your order pair. If you were going for these lows down there, if you had your stop loss here versus here at the next turtle soup, and then you trail it to the next turtle soup, whether you kept it at the first, the second, or the third,
It would
or you
always
even
reach.
move it up to here, you still hit this. It has zero impact on it. So if you really want to have a spot to put it, then yes, use the turtle soups. And wait for a new turtle soup to form. And don't feel the need to get hyper aggressive on the trailing either. Because again, if it doesn't get hit, it doesn't matter.
So that's why you don't expect the market tomorrow to be doing um pulling up as much as I think
Yes,
because it's already all balanced
it's
out
already
on the high
balanced.
time frames.
Bingo. So you know if
Oh,
you touch a balance range, you can basically kill it, for one. And just in general, you can use that as invalidation points because you know they shouldn't get hit. And your bearish turtle soups would be getting smacked if it was. Because again, we have all these like 4 turtle soups, right? Or even like this 5th one here. Whatever. And then we have this one here, right? Still. So
yes.
even though yes, and this goes back to again the time frame crap I was telling earlier. You could argue that this closed above if you really, really wanted to. Like if you really, really wanted to, I get it. But again, if you go up a time frame, this never happened. It never ever got anywhere close. Like if we go to 30-minute. We go to a 30-minute, this looks like nothing. It literally just wicks above into a 30-minute FVG. It looks like nothing. Your delivery's already down. That's what matters. So again, that's why you want to go in the higher time for also to confirm the shift sometimes. Because even though on the 3-minute it looked like a bullish shift, on the 30 it looks like air. It literally looks like nothing. So if we go back to this, and this is again bearish turtle soup to use. We have all of these. So if you do start to hit these, and you know that this whole thing is balanced, and there's no need to trade back into it at all, when you finally do so, you can literally start doing stuff like this. Buy stop. Put your stop wherever, all the way at the bottom, whatever you need to do. And if it triggers, then yes, you'll get something like that. But when it does work, they're just literally straight shots because the range is entirely balanced. So all of a sudden you're doing the same thing, but then something like this. And you got to remember the hit rate on these are absurd. Is the bigger thing. The RRs are very trash, but the hit rates are astronomical. So, but again, you can use things to anticipate this. So like even this, because this is like the dumbed. I'll admit this is the dumbed down way of doing it. You can do this the other way. So if we have, right, we have this bullish run, right, that we're looking for, or just say we took one because we traded above the balance range, whatever. You can do the same thing backwards / reversed for going short. So we can invalidate all of our bullish stuff and see where we need to stop. You remember how we saw that setup on Friday? How it set up a low and then just got super parabolic? And
Yeah.
then you're setting up a sell model to pair it with? Kind of sounds like Friday. I hope you're seeing the similarities.
Yes, I see it.
This was on Tuesday. It wasn't
See,
even that long ago.
imbalance, balanced, and then there's nothing until
Yeah. So again,
yeah.
this is why I was saying you can anticipate reactions at like these old breakaway gaps or like these old imbalances, but they should not actually hold price. They should eventually just roll over. And they should really just exist to bait people in to buy it. Especially someone sees something like this, they're going to think, oh my gosh, stop run of the century, I can buy this, let's go long. Right? Oh, I took out the low, we took out these new lows that somebody bought, so now that those people got stopped out, I am now safe to buy.
But
And
that's
then
because on the high time frame it's
there's a
balanced out.
Yeah, not even that, but those pops, those super large pushes are just to bait retail in, especially if the market's been going down and then you get that, on this case the bullish side, they're very likely they're just inducements to get longs in, to get new people to buy, so they can either take them out or just crush them out afterwards. Because again, people try to bag hold it, and the price is only going to reverse after the shorts that have been making money all day chase this at the very, very bottom, and the people that tried to buy this are bag holding. When they're doing both, that's when it'll reverse. Because again, even this, I guarantee you, someone tried to buy this right here, thinking, oh, this is the bottom. It finally stopped going down. I got a nice little, hammer candle, like a bullish looking candle. Those are existing just to get people to buy it. That's literally it. It's just to get people to buy the market. This same thing here. Big bullish candle. After hitting these lows, okay, let's buy it. Oh, nice hammer. After hitting this low, let's buy it. Nope, swept this low, let's buy it. Crushed out. Just to get all of their longs into smart money's hands. So. But the reason that's so important is going back to the balancing thing. If we're going to have our bullish turtle soups be the invalidation, we know that if my bullish turtle soup is getting hit, it's not very bullish, right? So I can do something like this, where if this is my, my last bullish turtle soup, I can take this to go the other way. Try to make the RR as realistic as possible, but you could take this to go the other way. And even though it's like a 0.5, if it's a 0.5 that has 80% chance of working, would you take it? Or you hold it for whatever reason, and all of a sudden now it's a 1 to 3. Or 1.3. But again, if you're going to be like super simple about it and just have like these random stops, then yes, the RRs are going to be skewed. But if you have actual ideas of how to balance it, the RRs will never be this wide. It really won't. Because even like this IOFED, you can have your stop at the IOFED. Because you know that all of this is balanced. Because again, notice how you have the buy side from this move, the sell side here, and then the buy side again. So your smart money reversal's up here, and then it trades back through it to fix it, and then it's just leaving it. No need to trade back up into any of this.
And then once it breaks the low, that's why it pops. Because this is,
Yeah. Because even like this, all of a sudden now, if you held to the low, it's a 1 to 6 now. All of a sudden it looks way better. Even though, again, it's not even like that. So, but yeah, if you just learn how to balance ranges in both directions, you can literally just start buy stopping and sell stopping shit all the way through. Because again, you know that if you hit, especially this now, because all this did was just prove that this should not get hit. So even worst case, best case, do what you know is like guaranteed and have something like here. Or have at least an idea. Because you don't necessarily have to use these even for like your main trades. You can use these as add-ons. Like for adding to your position. Because if you already know you're running for this high, and you know that if you hit this, you're going to go to this, put a buy stop there and collect that money while you're already on the way there. Worst case, if you missed everything here, you're getting in there to ride that. So, yeah, using it both ways is 100% the key. Because then it'll save you your RR as well. So then that will be good, but then the hit rate will still be up there. But it was super important to know all of that because it'll prevent you from getting trapped on stuff like that, or even like this. There's definitely ICT people even. They got tripped on this thinking this is a bullish break. They turtle soup the low, ready to keep, we manipulated down, clearly grab the sell side, we're ready to go. It's the same thing. And then they just smashed out after. But again, if you know how to balance ranges and everything, you can anticipate that.
Okay.
So that's pretty much the whole.
Yep. I just got to keep going over it and over again. The balance, rebalance. See, I'm looking at the
Yeah.
I'm looking at MES and I'm just looking at the same thing.
So what I would highly recommend over anything is using a line chart. So the button we had for the lines, use
Yes.
that just to start, just to get an idea. It'll help you spot turtle soups a little bit better and swing lows and everything. Then like reading left to right. Because again, remember even like how we talked earlier, this is our bullish turtle soup. If the bullish turtle soup breaks like this, we're reading left to right. We came from a bearish range. This is a lot more likely to hold than to keep going because we broke a bullish turtle soup and we shifted. Now, if this never broke, then yes, 100%. If we were floating up in here, you should have stayed bullish until this thing broke. But that's what you need to use is the turtle soups, like I said, as lines in the sand. And that way you can know for sure if you need to actually do anything. Even like this, you can see it here. Okay, cool. Now protect this. Up, up, up. Bullish turtle soup. Still going. Bullish turtle soup support. So, and even something like on this. Notice how just the price itself. Sure, we turtle soup here. And then I want you to notice how we have this high here to this low. From 67 to 64. You see what I'm saying? This high to this
Yes.
low. I want you to notice how we only run back to 67 and then keep going. We don't come back down to 64 at all. Because you have essentially from 64 to 67, this move here is buy side. And then you have your sell side.
Well, if it's only from 64 to 67, why does it dip under?
No, so
Like, yeah.
you're talking about coming to here?
Yeah, but you see how it goes from 64 to 67, it rebalances, but it goes slightly under.
Here.
Correct.
Yeah. That's fine. It's probably just a turtle soup on a candlestick, to be honest, or something like that, or just an FEG, yeah. So the main thing you want to,
Okay, I see what you mean.
yeah, so the main thing you're
Because
trying to see with this,
on the lines, it also includes the wick,
no, it takes the body only. It
just
doesn't
the
include
body.
wicks at all. There's no wicks on a line chart. So do remember that. I think it's only the close, honestly. So they are less detailed than a candle, technically. But the reason I want you to recognize it is you can notice a finger just like a paintbrush. We have buy side and then sell side. And then, yes, we come lower, whatever. And then we start to trade back and forth through. So this is just balancing this range out to fix it all. So when we finally exit past 67, if we've already offered everything from 67 and under is already good, there's no need to trade back into it. That's why I will trade off the top of it and then keep going. Because it doesn't need anything back in here. It already balanced it out on this up move and this down move, and then this whole slow stair stepping upwards. So it didn't need anything there. So now as you keep going, remove all this for the time being.
Oh, okay.
As you
Okay.
keep going, this new range is here from 67 to 67 and 3/4. All it needs is back down to 67, and then it can keep going. This is now its new range from, we'll say, 67 to 69. All it needed to do was come back down to this sell side here. Because that's all, if you think about it, sell side, the highest point that the sell side was offered was up to here, up to this level here. So it shouldn't need sell side below that level at all. So when you push away from it, you're only looking for a retracement to where the sell side is last needed. Because it doesn't need anything below it, so it would stop at the top of it to keep going. In this case, also a turtle soup. Turtle soup keeps going. Now again, we had sell side from here to this low. From, we'll say, 70 to 67.50. So if we've had sell side from 70 and below, and we finally push past it, because remember, price can't teleport. So there's no need to trade back up into any of this. And we've had sell side up until 70. That means we can bounce off of 70 and keep going. We then, same thing, push up to 71, trade back. We already had it to 70, so we only need to come down to there, to the last sell side, to keep going. And because all of this whole thing is balanced, you don't need any of it to trade back into. And that's why it literally just hits the top of this, turtle soups, and then keeps going. And then you keep going. This whole thing is good. 71 and under is good, completely. This to 72, 75 is just fine. So we hit I assume, turtle soup, FEG, whatever, into this. So we shouldn't need this at all. If it needed it, it would have got it. Market continues. Really just stops to fix whatever this is here. The same idea of balancing the sell side and buy side. Only stopping to what it needs to keep going. So because it already had balance to this, and then balance to this, these sell side deliveries, stops right at the top of it and then keeps going. Hits what it needs, and then keeps going. And this is when I hit the order block, but same thing. It's the same move. This is the exact same move, just distorted in time. It just took longer. This is the same turtle soup we know and love, the internal run, right? See here, we have the first push, second push, and then whatever the third one. And then you hit that, and then you keep going. This is the same thing. This one just took 30 bars. This is the same thing here. This one was just a lot quicker. This one was only 10. This is the same thing here. This was, 11/26, whatever you want to call it. This is the same. These are all the same thing. It's the exact same move or pattern. The only difference is how long it takes to do that, or where it decides to turn around from. But realizing that this is the actual thing it does. So again, because all of this is balanced, and all of this is good, and again, there's a reason why it stops here, and why this was a breakaway gap. It already balanced this, so this is just price leaving it. No need to come back lower, because we've had now sell side up to 81. So when we finally trade into an area we no longer needed, because we traded down to 74, the only thing we're concerned about is what needs to get fixed from this range here, the most recent range. Because if you're already balanced, whatever you enter with the new range is all that matters. So all we're now worried about is this range here, which we have our turtle soup, our FEG, all that stuff from earlier, to then keep going. But because we know all of this is balanced, there's not a single thing in here that can hold, so you get to trade through all of it.
Yep, and it's going to blow right through it to at least this, what is this, 5883?
Correct.
On MES.
Yes. You would want it to just blow through, candle-wise, just blow through everything. And that's when you can be willing to take your IOFEDs, your FEGs to be short, trade your down close candles highs and just add on those, your bearish order blocks, everything else that we know about for going short. And then just pairing that as it is. But understanding what is balanced and what's not give you a lot of things to run through. And again, even though you might get a reaction off something, you're not looking at as some type of reversal or anything. It's very likely just to not hold. It's very likely fake. Same thing here. You get a couple lows here, a couple green candles. Somebody bought this, but again, you see how it's just hitting this old inefficiency, like this old breakaway gap. So again, you'll get reactions, or basically reactions that'll stop there for a little bit, but don't actually look for it to hold price at all. Let your bearish invalidation get broke, or your current leg in price, in this case the bearish invalidation, get broke first before considering doing something else. In this case, going long. You want where you came from to get broke first, which in this case it wasn't. And again, even something like this, if you're willing, and depending on just who you are, you have this here, this FEG candle to wait. put your stop loss above here before doing anything else. Or again, trail it super aggressive if you want to, but then you got to be open to something like that. Which again, if you're going to be fighting over 2-3 points in this case, it just depends on who you are. But you just want to follow the same thing every time, and so that you do quote unquote nothing wrong. Which doing nothing wrong is just following the plan. So if you do what you're supposed to do and it loses, it doesn't matter. You do what you're supposed to do. So that's still good. That is good. So it's really just, in my case, I just need to follow the candles a bit better. And again, same thing on oil. All of this is pretty balanced. Because I was looking to short this and I never got offered it. So, but the bullish never broke either.
And it offering it now since we already have a turtle soup.
It could be, yeah. Oh yeah, it 100% could be going for this easily. He's got to wait and see. And again, even if obviously wait till Sunday opens and whatnot, but if you get a, depending on what it does, and if you get a bear shift, see what happens. It's gonna either go bearish or go bullish. That's all it's gonna do. And if it's going bearish, what's gonna hold true? Up close, civvies, all that, all 3, 4 bearish turtle soups, all those should hold. If they're not, well then you already know. And again, you can use, because we have like turtle soups here, all that, all this balancing and everything. Again, notice how the body stops at this sell body here. It wicks into it, sure, but notice how the body stops at the body.
Mm-hmm.
That's the idea of the balancing. You've had sell side from here to down here. Basically, not even from here to down there, but more so from here and lower. So when you push past it, you shouldn't need and lower at all. You should just need what was last there and then keep going. Because this whole thing was balanced. Which again, allow it to wick into 100%. Don't be super, not strict with it, but don't be crazy. Again, especially if you don't want to use the order block that time or just like the balance range, have a turtle soup be your stop loss. So like this, you could do something like from that turtle soup at the bottom here, since this is a turtle soup. Even just have a marker or something like that know that, hey, if you hit this, or what, just, I guess the stop doesn't matter, but if you hit this, go lower and just collect this money, or just this range. And usually that's what I'll do, is I'll just start putting boxes of like spots I know that should not hold at all. Like even like this whole thing was balanced. You can see the FEG and the FEG, so like the 1 and 1, and then just your smart money reversals up here. So by the time you're trading through all of this, you shouldn't be here. So if you actually are there, you get to run through all of it. That's what's so cool about it. And so then you have an immediate bias / direction. And you can almost ignore every PDA. You can just hit the buy and sell button and put a stop at the turtle soup and see what happens.
Yeah. I'm just okay. So I was seeing it right, but I just couldn't break it down. But yeah, imbalance gets rebalanced, and then if it goes back into it, it is just basically a pullback into the fair value gap because it is just going to go.
Yeah, even something like this here, this down move trades up into the FEG here, but then sits, swipes it, sure, but this, you got to realize this is just that. Same thing, it just took a lot longer. There's no difference in this. There's no difference in this at all. Or even this here. Big push down. Again, bullish turtle soup at the bottom for a retracement. And then lower. And you can even see this here. You see how we offered everything pretty equally here? Again, buy side, sell side, all that.
Yes.
Then it leaves this FEG here and doesn't trade back into it.
Yes.
Until way later. And again, you get the reaction out of it, sure. But notice how it hits the SIBI. And then it's back to bearish support already. This was a breakaway gap from the very beginning. It had, the moment it was touched, it should not have held. to not have held price at all. That's how you can use them. Or like even this one here, because you have like a BPR, a balanced price range. If this is all balanced, you hit it the one time. If you're hitting it again, you should not be. And again, you'll see stuff where like it'll make like that fake bottom and then crush it out, and then get people to think it's in, and then crush them out.
Mm-hmm.
It's always going to do that. Whether there's an old imbalance there or not, it's very likely if you see just like some green candles at the bottom or like near the bottom, you can almost assure they're going to be tossed. Because I don't know if you remember this again, the green candles here. Get people think it's a triple bottom, whatever, and then just they toss them all through.
Okay.
That's really it, to be honest. But I would definitely just work on those like 3 or 4, and just follow the delivery and see what's happening after your liquidity and everything like that, or seeing like which range you came from.
Yeah, I've got to put it into practice. Like, I know I can see it, but I have to put it into practice.
Yeah, I wouldn't worry too much about balancing the ranges. I would just, if you want to make it super, super basic, I would just mark off your turtle soups on both sides of the market. Like where your bullish ones, where your bearish ones, and then which ones are you breaking at the current time, which ones are holding. And that should be, you combine that with like order blocks and what have you, because you're gonna get moves like this where it's that internal run. Because I want you to realize that move I just drew out, if you remember, this is the same thing. I don't know if you're seeing it, but it's the exact same thing. It's a lot longer. That's the only difference. That's literally the only difference ever. It's just how long they decide to do that move for.
Okay. All right. All right. Looks good.